The committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. What do we have here? This hearing is entitled Devalued, Denied, and Disrespected: How Home Appraisal Bias and Discrimination Are Hurting Homeowners and Communities of Color in particular. So I now recognize myself for 4 minutes to give an opening statement. Today we will take a closer look at discrimination of homeowners and communities of color in appraisal process. Last Congress, I convened a hearing to examine the state of the appraisal industry, including the lack of diversity in the profession and unequal valuation of homes in communities of color, those owned by people of color. Since then, I have engaged the appraisal industry and profession in critical conversations around the need to address these inequities, as we have seen increasing reports of appraisal bias and alleged discrimination. However, there's still much to be done. A home's value is critical to closing the wealth gap and ensuring the communities of color build generational wealth. Both over and under valuation of a home is harmful to buyers and homeowners by either saddling a buyer with a home worth less than the debt they take on, or selling short homeowners of their nest egg. Bias and discrimination in appraisals can result in perpetuating historical disinvestment in communities of color, lowering home values for communities of color, locking people of color out of home ownership opportunities, and contributing to the widening of racial and ethnic wealth and home ownership gaps. We must not forget that home appraisal discrimination based on race, color, sex, religion, national origin, familiar status, disability, and age is illegal. However, recent news reports have shown the appraisal bias faced by homeowners of color is still a reality. We have all seen the articles. A Black family seeks to have their home appraised. When they're physically present or leave their family pictures within the home, they receive a low appraisal. When they whitewash their homes by removing their pictures and other indicators of Blackness and insert those of fictitious white families, all of a sudden, the appraisal jumps in value. These aren't just anecdotes. Data bears out the desperate appraisal treatment of homes owned by Black and Latinx homeowners compared to homes owned by white homeowners. As a result, studies have found that a home in a white neighborhood is valued 2 times higher than comparable homes in Black and Latinx neighborhoods. That is why I have drafted legislation to be discussed at today's hearing. My bill, the Fair Appraisal and Inequity Reform Act of 2022, addresses appraisal bias and discrimination by establishing a new federal valuation agency responding to a key recommendation made by President Biden's Interagency Task Force on Property Appraisal and Valuation Equity. I thank the witnesses for appearing here today, and I yield back. I now recognize the gentleman from Arkansas, Mr. Hill, for 5 minutes.
Well, thank you, Madam Chair, for holding this hearing today. Accurate appraisals are a vital component of the home buying process. They provide important guidance to lenders offering mortgages, as well as financial protection to taxpayers backing those loans. This is important given the magnitude of the total value of all outstanding U.S. mortgage debt, which is currently about $12 trillion. As a former community bank chief executive officer and executive for many years, I know the essential role of appraisals in providing market confidence to home buying families who deserve a fair and honest valuation of their investment, and for the lenders, true security about the value of their collateral. In other words, honest, independent appraisals are incredibly important to maintaining the safety and integrity of mortgage lending in our country and in our families' accounts. So when we hear allegations of how racial bias in the valuation process is systematic, that's a problem for many reasons. First, it's wrong and unlawful, not to mention immoral, to discriminate against someone in these transactions on the basis of race, color, religion, sex, disability, familial status, or national origin. Such discrimination is a crime. And if a crime is being committed, our government is committed to stopping it. Some have alleged, often based on anecdotes or broad assumptions, that racism exists in the appraisal profession and that in turn perpetuates systemic racism. That's a charge that demands serious consideration, not to mention hard evidence to back it up. Yet a lot of questions remain about what exactly is happening here, and also why. And I hope our witnesses today can help shed some light on the actual facts before we in Congress leap to conclusions. I would note that while this hearing is focused on the potential impact of undervaluations and appraisals, there should be equally serious concern by members of this committee on the impact of overvaluations in appraisals. Overvaluations require consumers to take on more debt, reduce the affordability by endlessly spiraling home prices at ever higher and higher levels, literally destroying, as we saw in 2008, nearly $16 trillion worth of household wealth. As a commercial banker during the 2008 crisis, I saw firsthand that destruction through overvaluations by irrationally exuberant appraisers, lenders, and buyers. In a generation previously, as a Treasury official responsible for helping stand up the Resolution Trust Company in the early 1990s, I know this firsthand from the savings and loan crisis of the late 80s and early 90s. So in fact, if we're going to demand fairness and accuracy in appraisals, we should, and it's critical to examine all the factors that harm the appraisal quality, that lower competition, and inhibit market innovation. That's the only way we're going to ensure that we get a fair market valuation of assets for both lenders and those households who are making their sometimes very first, most important financial decision, investing in a home. And I hope we can accomplish that today and do it in a bipartisan manner. And with that, Madam Chair, I yield back the balance of my time.
Thank you. I now recognize the gentleman from Missouri, Mr. Cleaver, for 1 minute.
Thank you, Madam Chairwoman, and thank you for holding this important hearing. Although this committee has held broad hearings on the appraisal industry in the past, I appreciate that this discussion squarely calls out bias and discrimination in home appraisals. In March of last year, I authored a bicameral letter with colleagues in the House and Senate, including this committee, demanding that the Federal Financial Institution Examination Council and regulators take immediate action to address disparities in home valuations for communities of color. Studies have shown that appraisal bias is prevalent throughout the country. Research from Fannie Mae, from Freddie Mac has demonstrated that appraisal disparities broadly exist for communities and borrowers of color. Separately, research from FHFA analyzed millions of appraisals and found evidence of bias in the neighborhood description of valuation reports, including some explicit references to race and indirect comments alluding to it. In April of last year, my colleague on the committee, Congressman Torres of New York, and I introduced the Real Estate Valuation Fairness and Improvement Act, which proposed an interagency task force similar to the PAVE task force and announced by the administration in June of last year. I am thankful for your leadership, Madam Chairwoman, and leadership on this, in this administration in taking appraisal bias head on. I yield back.
Thank you very much. I would now like to welcome our distinguished witnesses. First, we have Mr. Pledger M. Bishop III, who is the president of the Appraisal Institute. Next, we have Mr. David Bunton, who is the president of the Appraisal Foundation. Next, we have Mr. Dean Kelker, who is the Senior Vice President and Chief Risk Officer of Single Source Property Solutions, testifying on behalf of the Real Estate Valuation Advocacy Association. Next, we have Ms. Lisa Rice, who is the President and CEO of the National Fair Housing Alliance. Last, I will recognize a gentleman from Minnesota, Mr. Emmer, to introduce our final witness.
Thank you, Madam Chair, and thank you, Mr. Hill, and thank you to all the witnesses that are joining us today. I just want to use this quick minute to extend a warm welcome to one of our witnesses today, Mr. Tobias Peter. Mr. Peter is a dedicated research fellow and the Assistant Director of the American Enterprise Institute's Housing Center. He is the author of several reports on housing policy and consistently provides invaluable insights into our housing markets. Mr. Peter is also a constituent of mine from St. Cloud, Minnesota, and I've been fortunate to know Toby for the past 4 years. Mr. Tobias, thank you for joining our committee today. On behalf of the committee in the 6th District, thank you for lending Congress your time and expertise as we explore ways to strengthen our housing markets. I yield back.
Thank you. Without objection, your written statements will be made part of the record. You will have 5 minutes to summarize your testimony. You should be able to see a timer that will indicate how much time you have left in your testimony. Mr. Bishop, you are now recognized for 5 minutes to present your testimony.
Thank you, Chairwoman Waters. The Appraisal Institute is deeply concerned about recent allegations of bias and discrimination in housing and appraisal. When just one individual conveys concern and uneasiness about bias or discrimination during an appraisal assignment, we must stop and listen to seek and understand the consumer's experience. Further, where issues or problems are identified, we must seek to understand the causes and work with stakeholders to resolve them. To be an appraiser is to be independent and unbiased. It is our ethos and at the core of the professional appraiser. There's no benefit to an appraiser in violating this public trust. We firmly believe most appraisers uphold this high standard and strive to learn more and develop protocols to increase confidence and credibility in their work. Discrimination exists and the appraisal profession is not immune. I believe communities of color face discrimination in appraisal. The same is true in other aspects in housing and real estate as well as in other parts of our society. It's an unfortunate part of our history as a nation. At the same time, we believe the appraisal process is sound. We do not believe appraisal bias is rampant, rather isolated. Understand, one instance is unacceptable. No profession is immune. What is important is that we have meaningful enforcement when appraiser bias occurs, and we give our members the tools to recognize it and interrupt it. Systemic bias, when it exists, is present in sales transactions. Appraisers cannot control the actions of buyers and sellers or others involved in the housing market. Moving forward, this will require more study and creativity on the part of all the participants, including the appraisers. The appraisal process has come under study and review by several researchers, think tanks, and government-sponsored enterprises. Although some of the results as to bias in appraisal are preliminary and others have produced contradictory conclusions, these findings have educated all stakeholders to better understand the appraisal process and how it fits into a larger ecosystem of mortgage finance. We strongly believe that even one instance of appraisal bias is unacceptable. We believe the Veteran Administration's Tidewater Initiative would serve as a strong model for combating concerns over bias and discrimination. There's no program like it in the industry in balancing consumer rights of appeal with appraisal independence. This kind of mitigation on the front end would clearly be helpful to address some of the concerns recently reported in the media. There's belief held by some that the appraiser control or set the market with the appraiser assigning value to property. Buyers, sellers, agents, and the rest of the market then responds to the appraisal. In actuality, the market is driven by buyers and sellers, and their actions are reflected in purchase price, which includes terms of sale, sales concessions, and other considerations. Purchase price is a fact. We know what it is. Appraisers analyze the facts and apply unbiased local market knowledge and professional judgment as an independent professional to develop a credible and well-supported opinion of value for a specific property as of a single date. An opinion is not a fact that can be found. Opinions require support, should be logical, and follow reasoning. Any formal appraisal review requires forensic analysis and understanding. These points are missing from today's conversations. We also strongly support appraiser, lender, and consumer education goals found in the PAVE Action Plan. Our organization has been active in developing education and supporting valuation bias and fair housing education requirements for appraisers at the federal and state levels. New state laws that have been enacted over the past 2 years can serve as models for other states looking to bolster education awareness and understanding. We stand ready to assist in fostering greater understanding of the appraisal process for all stakeholders. In closing, we must be careful to balance the proposals for increased regulatory requirements on appraisers and potentially significant additional work in the event value conclusions are challenged with the efforts to make this an attractive and attainable and diverse profession. We see the difficulties of attracting new individuals to the profession under the current appraisal business and regulatory environment. Overbearing regulation may make the profession unattractive and dissuade new entrants to the profession. The proposed increased regulation, review, and audit of appraiser files resulting from a complaint of undervaluation due to bias does not reference due process. Due process must remain a central part of any reform. We need better consumer appeal processes, but we also need to protect appraiser independence. This is a difficult balance, but it is one that is necessary to protect the health of our banking and real estate markets. We look forward to working with the committee to continue to collaboratively work towards a fair and reasonable solutions for all. Thank you.
Thank you, Mr. Bishop. Mr. Bunton, you are now recognized for 5 minutes to present your testimony.
Thank you. Madam Chair, Mr. Hill, and members of the committee, the Appraisal Foundation greatly appreciates the opportunity to appear before you today to offer our perspective on the state of the real estate appraisal profession. By way of background, I have served as a senior staff member of the Foundation for the past 32 years, and prior to that, I had the privilege of serving as a senior Congressional staff member for a dozen years. Let me begin with a few words about who we are and what makes us different. We are a nonprofit founded 35 years ago, before the enactment of FIREA. We are not an advocacy group or a trade association, but rather an umbrella organization composed of over 100 organizations and government agencies with an interest in valuation. Our work product covers all aspects of appraisal: real property, personal property, mass appraisal, and business valuation. More than 30 years ago, Congress authorized us to provide private sector expertise in the real property appraiser regulatory system under Title 11 of FIREA. The Foundation does not have any regulatory or enforcement authority, but we provide the tools for the regulatory community. Specifically, we set the minimum education and experience requirements one must meet in order to obtain a state credential. We are the authors of the National Uniform Appraiser Exams, which are used by all 55 states and territories. And we are the authors of the generally recognized standards of conduct known as the Uniform Standards of Professional Appraisal Practice. These standards, which lay out professional standards appraisers must follow, has prohibited appraisers from acting with bias or discriminating against protected classes since day one, which was over 30 years ago. The allegations of bias and discrimination we have seen in the press make it clear that more must be done to protect the public's trust in the appraisal profession. Even before these press reports were beginning to emerge, the Appraisal Foundation was taking action and collaborating with others to address concerns of bias, discrimination, and a lack of diversity in the appraisal profession. With the Appraisal Institute, we developed one of the first symposiums on this important issue and also conducted a comprehensive diversity survey of appraisers to determine where we are today and also to be able to measure future success. We're also proud to be a sponsor of the Appraiser Diversity Initiative established by the Appraisal Institute, Fannie Mae, Freddie Mac, and the National Urban League. Later this week, we'll be meeting with Lisa Rice and her colleagues with the National Fair Housing Alliance to discuss the future composition of our boards, are establishing an advisory council composed of organizations that represent fair housing, civil rights, and consumer interests, and advising them of our engagement of the nationally recognized fair housing law firm, Rellman Colfax, to assist us in our efforts going forward. With the release of the PAVE Task Force report last week, we look forward to meeting with them to discuss their recommendations regarding ways to work collaboratively on their ideas to increase the federal government's role within the appraisal regulatory system without dismantling it entirely, as well as increasing the amount of fair housing education that's required of appraisers. We would also like to discuss any barriers to entry that need to be addressed. Regarding removing possible barriers to entry, I am pleased to report on an alternative pathway for aspiring appraisers to gain experience without the need of finding a supervisory appraiser. Through computer-based simulated training, think of flight simulators for appraisers, trainees could be exposed to an almost limitless number of valuation challenges, and once the training is completed, they will have met the experience requirement and can sit for the state exam. Providers indicate that there will be more than one simulated training module available to aspiring appraisers before the end of this year. I must note here that the draft Fair Appraisal and Inequity Reform Act of 2022 is deeply concerning. This legislation, if enacted, would negatively disrupt the appraisal regulatory system, including the 55 states and territories who have incorporated the Uniform Appraisal Standards and qualifications into their laws and the regulations for over 30 years. In addition, there are over 3 decades of case law which cite our standards. We are concerned that the mere existence of this draft legislation may suspend or stall development of the simulated training modules I just mentioned, modules that open the doors to those not able to find a supervisor, and was noted in the PAVE report as an experience alternative. Rather than dismantling the system, we should be looking at ways to work collaboratively to address concerns about the federal government's role within the appraisal regulatory system without dismantling it. Again, the Appraisal Foundation appreciates the opportunity to share its perspective today, and we look forward to working with all of you. Thank you.
Thank you, Mr. Bunton. Mr. Keller, you are now recognized for 5 minutes to present your testimony.
Good morning, Chairwoman Waters and distinguished committee members. I'm here representing the Real Estate Valuation Advocacy Association, otherwise known as REVA, to share the perspective of appraisal management companies. AMCs are third-party service providers engaged by banks and non-bank lenders to manage appraisal panels to complete residential assignments in compliance with state law and federal appraisal independence requirements. Since the 1960s, U.S. financial institutions have outsourced services to AMCs due to their expertise, efficiency, and focus on federal and state regulatory compliance. However, following Dodd-Frank and the creation of federal and state requirements to license AMCs in each state, the AMC business model grew in use for both large and small lenders to help them remain compliant with federal and state banking and mortgage regulations. All 50 states and the District of Columbia have adopted federally compliant AMC licensing programs, which is typically located with the same regulator for appraisers. While AMCs have contact with appraisers and their lender clients, AMCs do not have much direct consumer contact. They are agents of the lender to facilitate the procurement of an appraisal or property valuation. AMCs are required to follow federal and state public policy related to fair housing and discrimination. It is our intention to be an active part of the collective solution as the recommendations of the PAVE Task Force final report are further discussed and new policy revisions implemented. AMCs have robust quality control programs in place to examine appraisal reports after the initial delivery by the appraiser. These reviews are done to ensure compliance before the appraisal report or valuation is delivered to the lender and are not used at this point in time to determine a lending decision. Any appraisal management company QC process must comply with 2 important components of appraisal independence under the Truth in Lending Act. First is to ensure the AMCs comply with federal and state appraiser independence requirement, including not attempting to directly or indirectly influence the independent judgment of the person preparing the valuation. AMCs perform a quality assurance review in compliance with appraiser independence, which permits the AMC to ask an appraiser for 3 major items. The first is to consider additional appropriate property information, including consideration of additional comparable properties that may be relevant in the analysis of the property. Second is to provide additional detail or explanation to support the valuation provider's value conclusion. And finally, to correct any errors that may have surfaced in the appraisal report. Federal interagency appraisal and evaluation guidelines mandate that lenders are responsible for the safety and soundness of property valuations. Most lender clients outline requirements for the AMCs that they have engaged to perform QC as part of the overall services performed on their behalf. State laws vary, but most have a requirement that AMCs must audit the work of appraisers on their panel, although the details of how many appraisals must be reviewed or the extent of the review can vary. AMCs review their panel of independent fee appraisers to grade appraisal performance on past assignments. We research state boards to determine if there is any disciplinary history, and we require background checks to determine if there is any criminal history. Individual assignments include a letter of engagement that outlines assignment-specific criteria required by a client as well as the AMC. A red flag is identified through an automated or manual review of an appraisal. The concern is escalated to a more intensive review based on the nature or severity of the concern. Reconsideration of value may be requested by the lender or the borrower through the lender. Any questions or issues identified are addressed by the AMC with the appraiser who completed the appraisal. REVA supports a vibrant and diverse appraiser industry. The future of appraisal needs to retain a human component, which is why we support the recruitment of new appraisers to help revitalize the profession for the next generation. The reliance on appraisers and appraisal products creates an important need to help ensure the sustainability of the profession. Consumers, residential mortgage lenders, secondary markets, and AMCs all rely on a plentiful supply of qualified appraisers to meet anticipated demand. The current experience and education requirements of becoming an appraiser are overly burdensome, creating a roadblock for the recruitment and training of new appraisers. REVA supports removing barriers in the recruitment and training of new appraisers. Modernization should incorporate new technologies and learning techniques to recruit and train future appraisers, just as they are used for other industries. This includes the nationwide adoption of innovative initiatives such as PARIA or other alternatives that are created to make it easier to recruit, train, and retain
Thank you,
the
Mr.
diverse
Kelker.
generation.
Your time has
Thank you.
expired. Ms. Rice,
Thank
you're
you.
now recognized for 5 minutes to present your testimony.
Chairwoman Waters, Ranking Member McHenry, and other members of the House Financial Services Committee, thank you for the invitation to testify today on appraisal bias and reform, an issue which affects millions of people across the country. My name is Lisa Rice. I'm the President and CEO of the National Fair Housing Alliance. Representing over 170 local fair housing groups, NAFA's goal is to eliminate all forms of housing discrimination and ensure equitable housing opportunities for all people and communities. NAFA, along with Dane Law and the Christensen Law Firm, issued a groundbreaking review of the appraisal standards and appraisal qualification criteria to examine if there was evidence of potential bias in a study commissioned by the Appraisal Subcommittee. We also had the honor of briefing the PAVE Interagency Task Force on several occasions and applaud their comprehensive action plan. For most Americans, the home is their single most important asset and holds the key to wealth, stability, and opportunity for their families. But America's long history of discriminatory housing policies has undervalued homes for people of color and entrenched an unfounded association between race and risk. Today, the black-white homeownership gap is larger than it was when the Fair Housing Act was passed in 1968. And the wealth gap between white households and households of color remains large and persistent. The Fair Housing Act's promise of fair and equitable housing is unfulfilled. We have all heard the shocking stories of appraisal bias from across the country, including stories of whitewashing, where homeowners of color have had to go through the excruciating experience of removing all evidence of their racial identity just to receive a fair appraisal. From Carlette Duffy in Indiana, who received an increase of almost $150,000 after asking a white friend to pose as her brother, to the Austin family in California, who received an increase of almost $500,000 after asking a white friend to pose as the homeowner. These disturbing and even heartbreaking stories have shone a light on the serious shortcomings in the appraisal process. While some may say that these are just a bad few apples, researchers from a variety of backgrounds using a variety of data sets and methodologies all come to the same conclusion. The current appraisal system leads to adverse outcomes for borrowers of color on a systemic basis. So far, these racial and ethnic disparities cannot be explained by legitimate non-discriminatory factors. Congress must address bias in the valuation process and the urgent need for reform. Based on our research and outreach to fair housing, appraisal, and lending groups, researchers, and academics, we respectfully offer the following recommendations for your consideration. The appraisal industry has long operated in a relatively closed, self-regulated framework which has imposed burdens on consumers as well as small businesses. Congress should encourage the Appraisal Foundation, or TAF, to improve its processes. Congress should also develop the bold vision outlined in the Fair Appraisal and Inequity Reform Act, which would elevate the Appraisal Subcommittee to a new federal agency. To address the risk of broad discretion and underfunded enforcement efforts, Congress should encourage TAF to revise the appraisal standards. Congress should also provide the Federal Valuation Agency with rulemaking authority for the standards and ensure adequate funding under the Fair Housing Initiatives program. Congress should encourage the appropriate regulators to promulgate the automated valuation rule. Congress should also provide the Federal Valuation Agency with rulemaking authority to ensure all valuation methods are fair, unbiased, transparent, and consistent. To address appraiser shortages and lack of diversity, Congress should encourage TAF to revise the appraiser criteria. Congress should also provide the Federal Valuation Agency with rulemaking authority to set reasonable criteria, require comprehensive fair housing training, and require national registration with a unique ID. Finally, to improve research, compliance, and enforcement, Congress should encourage the regulators to immediately enter into a data sharing agreement and should provide the CFPB with rulemaking authority to develop a public valuation database. Thank you for the opportunity to appear before you today. I look forward to answering your questions.
Thank you, Ms. Rice. Mr. Peter, you are now recognized for 5 minutes to present your testimony.
Chairwoman Waters and Ranking Member McHenry, and distinguished members of the committee, thank you for the opportunity to testify today. And also thank you, Congressman Emmer, for the nice introduction. The case for centralizing appraisal standards and criteria under a new federal agency as proposed under the Fair Appraisal and Inequity Reform Act is not justified. It is based on unsubstantiated claims of systemic bias and racism in the housing sector and represents an unwarranted power grab by the federal government and is one step towards the federal government setting fiat home values. Upending the appraisal process risks misvaluing millions of properties, which could have serious repercussions for minority neighborhoods and rural areas where home sales are sparser. Last week's report by the Interagency Task Force on Property Appraisal and Valuation Equity, short PAVE, alleged inequities within current home lending and appraisal processes for communities of colors. The work cited by PAVE contains serious red flags, which were obvious from a cursory look. The work of the AI Housing Center has debunked the Brookings study and the Freddie Mac exploratory note, which were both heavily relied on in the PAVE report and this hearing's memo, long before the PAVE report was written. Most importantly, these studies conflate race with socioeconomic status, or SES, and by that I mean income, buying power, marriage rates, credit scores, and so forth. Once adjusted for difference in SES, race-based gaps found in these studies either entirely or substantially disappear, which raises serious questions regarding a race-based explanation. While individual appraisal bias certainly exists, the PAVE report admits that the exact number of instances of valuation bias is difficult to assess. We have undertaken a study with over 240,000 loans for which we knew the race of the borrower. Our statistical analysis found that racial bias by appraisers on refinance loans is uncommon and not systemic. These results in our methodology have been confirmed by other academic research. All of this work was ignored by PAVE. Further, research by Fannie Mae, which directly contradicted Freddie Mac's preliminary findings, was so selectively cited that this point was lost. It is questionable how PAVE could arrive at this conclusion when its own report admits a lack of data. Furthermore, this lack of data is the fault of the government. 2 years ago, we outlined a statistical approach using existing data that would have allowed FHFA, Fannie Mae, Freddie Mac to identify bad actors using existing data. This offer was ignored. Now, 2 years later, we are debating a task force report in the draft bill based on cherry-picked data, discredited research, and flawed conclusions, suggesting a lack of interest in getting to the truth and an alternative motive to provide an excuse for centralizing appraisal valuation standards and appraiser criteria in the federal government. Instead of this bill, agencies should get to work using existing data. These data should be anonymized and made available to independent researchers to verify, as a bipartisan group of senators agreed at last week's Senate banking hearing. This would allow bad actors, whether racially biased or incompetent, to be removed immediately from the profession, as they should. Additionally, since PAVE has misdiagnosed the problem, its proposed agency actions will not address racial and ethnic differences in homeownership rate, financial returns of owning a home, or median wealth. Instead, it will likely make these differences worse or divert attention from finding effective solutions. Rather than discredited claims of systemic appraisal bias, homeowners and communities of colors are being hurt by the combination of low SES, which certainly reflects a legacy of past racism and lingering racial bias, which leaves Black at a large income and wealth disadvantage relative to most whites, and foreclosure-prone federal lending practices. Research finds that Black and Hispanic homeowners experience lower return than white homeowners, which it attributes almost entirely to the higher prevalence of distressed home sales and not appraisal bias. The study finds that the disparity in distressed home sales explains about 40% of the Black-white gap in housing wealth at retirement. It also notes that, importantly, absent financial distress, houses owned by minorities do not appreciate at lower rates than houses owned by non-minority, which again directly contradicts the PAVE report. Foreclosure-prone affordable housing policies have been targeted at low-income and minority borrowers. These policies subsidize debt by providing excessive leverage and lower rates. Coupled with a supply shortage, the increased demand from additional leverage has fueled unforgiving boom-bust home price cycles. During the financial crisis, these policies contributed to over 10 million foreclosures, which were proportionally higher in low-income and minority neighborhoods. Notwithstanding massive subsidies and lending, federal housing policies have not built generational wealth. A federal takeover of the appraisal industry could have serious consequences similar to prior housing task forces, such as the 1967 Presidential Task Force on Housing and Urban Development, which ended up destroying many American cities, especially Black neighborhoods, or the 1995 National Homeownership Strategy, which ended in millions of foreclosures. Misvaluing millions of properties could have similar consequences, with minorities once again being the victims. Thank you.
Thank you very much. I now recognize myself for 5 minutes for questions. Mr. Bunton, in your invitation to testify, the committee asks that you provide the racial, ethnic, and gender diversity of all appraisal foundation staff, boards, and members in your written testimony. Some stakeholders and industry professionals have identified the foundation's minimal appraisal standards and qualifications as contributing to barriers to entry for the appraisal industry, especially for lower-income individuals, people of color, and women. So it matters who is thinking about, writing, and setting those standards. Others argue that those standards have a role to play in the lack of diversity in an industry that is about 98% white and nearly 70% male. I'd like to know more about the current composition of the Foundation's board. What is the current racial, ethnic, and gender makeup of each board, including the Foundation's Qualifications Board and Standards Board and the Board of Trustees?
Thank you very much, Madam Chair. I'll start off with the Foundation staff. 50% of the Foundation staff are people of color. I hired every one of them. The Appraiser Qualifications Board is composed of 9 people. The last 4 people that were appointed over the last 2 years included an African American, a Native American, and also a Hispanic woman. And 3 of the 4 appointees were women. So of the 9, right now, 3 are women and 2 are minority. The Appraisal Standards Board has 7 members, and it is 3 women and 4 men, and there is 1 woman who identifies as a Native American. The Board of Trustees has 21 people. I'm going to kind of guess here. I would say I think it's 9% minority and about 38 to 40% women.
In what year did each of the 3 boards welcome the first board members of color? Has that been recently?
The Appraisal Qualifications Board was appointed in 1989 and had a person of color on it at that time. He was the assessor for the city of Atlanta.
You have 3 boards.
That's correct. There has not been a person of color on the Appraisal Standards Board. We've had a person of color on the on the Board of Trustees for close to 20 years.
On the Board of Trustees, is there an African American?
Yes.
And the other 2 boards that you mentioned, each of them have 1 African American?
The Qualifications Board has 1 African American and 1 Hispanic Native American. The Standards Board does not have an African American and has 1 woman who identifies as Native American.
Thank you very much. Yes or no, do you believe the lack of diversity at your organization and on its boards has contributed to some of the bias and discrimination that has been well documented here today?
No, in fact, in the last 2 years, since February of 2020, we have been actively working on a number of diversity, equity, and inclusion efforts. We hired an outside consultant to make sure that when we go out to get people to the boards that you were just referencing, we gave this consultant the entire portfolio, our application, how we solicit applications, the questions we ask, how we rank candidates. That person came back with suggestions, and we have implemented them starting this year as far as improving the diversity of our boards.
Title 11 of the Financial Institutions Reform, Recovery, and Enforcement Act envisions the relationship between the Appraisal Subcommittee and the Appraisal Foundation to be that of grantor and grantee. Presumably, this relationship would provide a check and balance on the foundation by the federal government for the implementation of congressionally required minimum appraisal standards and qualifications. So while the subcommittee has made $2 million in grant funds available to the foundation over the last 2 years to support Title 11 related activities, the Appraisal Foundation did not accept these funds for fiscal year 2021. Whether intended or not, the foundation is able to effectively sidestep federal oversight by rejecting the federal funds. In the past, Mr. Bunton, the Appraisal Subcommittee has objected to burdensome education requirements that perpetuate barriers to entry for the profession, and federal regulators recently sent a joint letter to the Foundation regarding fair housing concerns with the Appraisal Standards Board's Ethics, Rules, and Advisory Opinion 16. When the federal government objects to your industry standards and qualifications in this way, do you have an obligation to fully address these obligations? Just yes or no?
Yes, and we had a separate meeting with those agency representatives.
Do you believe federal oversight is needed in the establishment of a minimum uniform standards and qualification criteria? Just yes or no?
Yes.
Do you believe your standards should be subject to the Administrative Procedure Act to ensure the public has the opportunity to comment that your organization appropriately considers these views? Yes or no?
Yes.
Thank you very much. I yield back. And the next person on the, Mr. Hill, you are now recognized for 5 minutes.
Thank you, Madam Chair. And as you know, our distinguished ranking member, Mr. McHenry, was not able to be with us this morning. I'd ask unanimous consent to insert his opening statement in the record.
Without objection, such is the order.
Thank you, Madam Chair. Mr. Bishop, of course, the housing market has been booming. House prices are double-digit. There's a real shortage of housing out there. Prices have gone up, but we drove interest rates to 0, so it's been a booming time for people trying to do mortgage finance over the past 2 years particularly. And I understand there's a shortage in the workforce for appraisers. Is that true?
Yes, sir.
And is it worse in rural areas?
That's what I understand.
And so under the PAVE recommendations for the administration talk extensively about a, quote, well-trained, accessible, and diverse appraiser workforce. Is that a goal you share?
Yes, sir.
What actions are you taking to work with our private appraisers around the nation to encourage and help advance training for people of color to operate and serve as leaders in the industry at the grassroots level?
That's a great question. There are several things that we have undertaken. First is the Appraisal Diversity Initiative. It's a collaborative effort between Fannie Mae, Freddie Mac, the National Urban League, and the Appraisal Institute. And it is backed by Chase Bank, who made a $3 million commitment to help this endeavor. What ADI has accomplished so far is through a bunch of seminar-type events, they've identified minorities and people of color who want to enter the appraisal profession, and about 150 of those individuals have been selected and entered the program.
That's good. Tell me how many licensed appraisers are out there in the U.S. right now, more or less?
Roughly 75,000.
Okay. So that's a small step in the right direction. I know my colleague Alma Adams from North Carolina will probably talk to you at length about our initiatives with our historically black colleges and universities. It's a great place to recruit. Do you have people actively recruiting on those campuses?
Yes, sir. One of the endeavors of the Appraisal Institute is the University Relations Committee, and we are just kicking off a pilot program now to get into the universities. We're there. Our members are there already, and this is an endeavor to organize it and make it more efficient. And our targets are HBCUs, community colleges, and universities across the United States.
Thank you, Mr. Bishop. Mr. Peter, back in 2010, I referenced in my comments about my experience in the 2008 crisis for appraisal mania, and certainly I witnessed it when I was at the Treasury Department from the results of the late 1980s, particularly in the savings and loan industry. So in 2010, Democrats enacted Dodd-Frank, and as a part of those financial system overhauls, the Democrats in charge at that time made it illegal to violate appraisal independence. Is that right?
I believe so.
And so how is the process harmed when you have valuations that aren't independent or fairly conducted?
Well, I think the process can be seriously harmed from a politicization of the appraisal process. For one, if that were to happen, the government could potentially misvaluate properties on a massive scale. This would exacerbate home price booms and bust cycles, and therefore it would expose the most borrowers that are with the least financial wherewithal to potential swings, which they are least able to withstand.
Thank you. I think we've witnessed that several times in recent years in our economy, most recently in the 2008 crisis. Are there any data out there on the effectiveness of those prohibitions? In other words, is there any data to support that integrity of an independent appraisal process?
I am not sure. I would have to get back to you on this one, sir.
How about data on the effectiveness of the anti-discrimination prohibitions in the Equal Credit Opportunity Act or in Title VIII?
I mean, we at the American Enterprise Institute at the Housing Center, we have undertaken a study of 240 refinance loans.
200, how many?
240,000.
240,000, yeah.
240,000 loans. And what we found was, when we looked at them, was that there was no systemic appraiser bias. So we looked at a whole, we looked at the industry, and we found no systemic bias.
Okay. On average, how many reported violations are there each year of ECOLA or Title VIII, do you think?
I mean, the last numbers that I've seen from HUD were that they were in the low double digits.
Okay. Thank you, Madam Chair. Now I yield back.
Thank you. The gentleman from New York, Mr. Meeks, who is the chair of the House Committee on Foreign Affairs, is now recognized for 5 minutes.
Thank you, Madam Chair. Thank the witnesses for their testimony. Let me follow up, I guess, with Mr. Bishop, though, on some of the questioning that the chairwoman was asking back and forth with Mr. Bunton. When she discussed Mr. Bunton about the boards, the various boards. But my concern also, on top of that is, Mr. Bishop, is that, I couldn't agree more with the chairwoman that diversity and inclusion is extremely important in this industry. When I looked at the Bureau of Labor Statistics report, it shows that of the approximately 80,000 appraisers, these are the individuals that are actually out there appraising, 80,000 appraisers in this country, 97.7% of them identify as white. 97.7% of the appraisers in this country identify as white. So it seems as though there's a complete lack of diversity, which I believe also can feed into systemic issues of black homeownership receiving lower property appraisals than white. So can you speak, what are the barriers? Are there barriers? Why would it be such a lopsided? Are there barriers to individuals getting in to be appraisals?
Yes, sir. It's difficult to get into the appraisal business, particularly to a residential side of the business. Most appraisal companies are small, independently owned, one or two appraisers in the company. And the common theme is they don't have time to take somebody in and train them. They can't afford to pay them while they're doing it, and it takes away from their time to produce their own appraisals, so it costs them money. That's the common theme, which suggests that the current supervisor-trainee model is not adequate for allowing entrance into the market, particularly in the smaller residential type appraisal businesses. So that's where the PAREA program you heard of, Practical Applications for Real Estate Appraisal, it is an alternative to earning appraisal experience by working for someone like me, who I would take you and mentor you through a 6-month or 1-year process to learn the basics of appraising a residential house, and then you could get licensed. The PAREA program will actually involve taking these individuals and training them, and they'll be matched up with someone like me, an experienced appraiser, who will mentor them through this series. We envision it as a series of case studies where they start off with a basic appraisal, and each one gets a little bit more, not nuanced or complicated, but it takes them through what a residential appraiser would experience working with me as their mentor, so that on the outcome, they would then be qualified as a licensed appraiser to go start doing appraisals.
So I think, Mr. Bishop, I want to follow up with you, because to me, anytime you have an industry like that, and it seems to be a block, and then always, it comes to the points where there are excuses, not saying that you're giving one today, you're telling it as it is, but others say excuses which blocks people from getting in. And we've got to open that up. And I think that that is an area that Congress can work on also, so that we can eliminate these barriers that continue to exist. And so I would like to follow up with you, but I'm limited on time.
Yeah, I'd be glad to follow up in writing any
Yes,
questions
please.
you'd like to submit.
Please.
Or just call me and I can talk to you.
Very good. Let me jump to Ms. Rice, because I have another question that, truth of the matter is, I don't know which is best. Ms. Rice, unconscious bias is pervasive throughout so many different aspects of mortgage and lending process, and I don't know which one is best. On one is you do the AVMs, which is more one is prescriptive, and the other one is more algorithm driven. What's best? Because I could see abuses in both. How would you? What would?
I worked on a case a number of years ago in which a judge opined that appraising was an art and not a science. And the art is where we move the field away from being more discretionary and having a lot of subjectivity in the process to one that is more scientific, more uniform, more standardized. The algorithmic-based systems can be problematic because they are using data that has bias embedded and baked into the data. So both need help.
Thank you, Mr. Meeks. The gentlewoman from Missouri, Mrs. Wagner, is now recognized for 5 minutes.
I thank you, Madam Chairwoman. Mr. Peter, the PAVE task force acknowledged in its own report that, and I quote, much of the gap in rates of homeownership can be traced to socioeconomic factors that differ on average between black and white homeowners, end quote. The task force went on to recommend 21 actions. Did any of those relate to the above statement?
No, they did not.
What would be the result of taking these actions if they result in improper valuation of homes?
Yeah, thank you for that question. I mean, the consequences could be really catastrophic, and particularly for minorities and people living in rural areas. There you don't have as many home sales, so if you misvaluate properties in this area, you could easily exacerbate home price boom and bust cycles, which would expose those to larger default.
And who would be, do you think, most affected by the taking of these actions in the improper valuation of homes? Who would be most impacted by this?
I mean, it would be mostly lower income people. And there's a history for this. Every time the federal government has gotten involved in the housing market, they try to fix big problems. Like in 1967, when they tried to eliminate all substandard housing, it has crashed and burned. It has ruined neighborhoods, particularly minorities and lower income neighborhoods. Likewise, in 1995 is the National Homeownership Strategy, where the goal was to raise the national homeownership rate up past levels that we have ever seen before. And of course, it created a massive home price boom that later came crashing down and ended up in millions, tens of millions of foreclosures, and it ended up wrecking the economy. And again, the people that hurt the most were lower income minorities.
And Mr. Peter, have past presidential task forces or strategies on housing topics, and you just outlined a few examples here, created meaningful changes or results? And probably more importantly, what should be our takeaway from the previous times that the federal government has substantially increased its role in the housing market?
Yeah, I think we really need to be careful with federal takeovers of the appraisal industry. And as I already mentioned, in the past, these actions have crashed and burned. And again, if we were to repeat something like this, the danger of doing it wrong could far outweigh the benefits of doing it right. And furthermore, I think the federal government has not proven its case. All the claims in the PAVE report are unsubstantiated, and instead we should be focusing on improving the socioeconomic status of lower-income minority Americans so we can actually address the root causes and not the symptoms here.
The root causes, absolutely. Mr. Peter, if the recommendations of the PAVE task force went into effect, could you detail what some of the results would be or might be for potential home buyers in rural America?
Yeah, as stated before, I think it would potentially misvalue homes in rural areas. And the consequences could be dire. But then also PAVE report talks about releasing data publicly. And of course, the data would be restricted. The data that are going to be released to the public would be heavily restricted, at which point it would actually be useless to use for independent researchers such as myself to verify what the government has done. The PAVE task force is recommending, and then the government would be having all the data internally, but after the PAVE task force's recommendations and what they've come up with, I'm very skeptical that the government is going to come up with proper analysis. And hence, I think we need to be very careful about the PAVE task force recommendations.
I thank you very much for your very frank and honest input. I, too, am skeptical at most of these governmental federal agency task force and recommendations going forward. I thank you for your testimony. I thank all of our witnesses, and I yield back the remainder of my time.
Thank you very much. The gentleman from Georgia, Mr. Scott, who is also the chair of the House Agricultural Committee, is now recognized for 5 minutes.
Thank you, Madam Chair. Ms. Rice, I want you to help shine a light on just who has generational wealth in America today, and also the many ways in which this kind of accumulated wealth can impact the social mobility of the average American family. So to start with, who would you say holds the majority of American wealth today?
Congressman Scott, thank you for the question. So we know that we have grave racial wealth disparities in the United States. When it comes to households with children, families with children, Black households have 1 penny of wealth for every $1 of wealth held by white households. And Latino households have 8 cents for every $1 of wealth held by white households.
That's very remarkable. Now tell me some of the common ways that middle-class people inherit wealth.
Well, many families inherit wealth because they get it from their parents, and that wealth is passed down. And for the typical family, most wealth is held in home equity. So homeownership really is the path to wealth building. It has been the path to wealth building for the typical American family for hundreds of years.
I'm glad you mentioned real estate as one of the assets that families pass down to their children and grandchildren. But also in your testimony, you also say this: home value in the United States is the cornerstone of generational wealth. And you further stated that historical appraisal practices have created some of the worst inequities and inequalities among Black and Hispanic families. So, Ms. Rice, can you explain to us how lower appraisals limits the amount of equity that a homeowner can earn from their home if they were to sell or refinance?
Certainly, thank you for the question. So when a home is undervalued, what that means is that as the borrower is paying down their mortgage debt, they're not seeing an appreciation in the equity that they're able to amass in the home. And so the lower the equity in your home, that means that you're not going to be able to transfer as much wealth to your children, when you make your transition.
Now, what do you believe is the root cause of this underevaluation, and how can we here in Congress work together towards a more equitable valuation of homes?
Well, there are many root causes. This is an issue I've been working on for almost 40 years. One of the root causes is a lack of diversity in the appraisal field, a lack of familiarity with appraisers who are appraising properties in underserved communities of color. We also have a long history of race-conscious policies in the appraisal sector, and that data has flooded our marketplace, if you will. And so a lot of the technologies that we use in the appraisal field are built on data that is embedded with this biased information, and that also yields disparate outcomes.
And now, Mr. Keller, as Ms. Rice mentioned technology, Mr. Keller, do you believe that technology, such as online appraisals, are the answer to ending discrimination in the appraisal industry?
I don't believe that that's the sole answer to ending discrimination. However, the addition of technology-based solutions help a third party, whether it's an AMC or a lender, to evaluate the quality of the appraisal data that they're receiving from the field. So
Thank
it
you.
helps.
My time has expired. Thank you, sir.
Thank you very much. The gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Madam Chairman, thank you very much. Mr. Button, you have sat through this entire hearing, been here, heard the testimony as the president of the Appraisal Foundation. You've listened to Ms. Rice and others today talk about the numbers of people, supposedly the data that is flawed, the data that might be biased, the lack of minority participation. I heard you enumerate the people who work within your industry that are on your boards, the people who would represent you and the Appraisal Foundation. The chairwoman spoke of this in her few minutes of, she was highlighting the issues in discrimination and bias that became very apparent today in the hearing. Would you tell me what you think you heard that was discrimination and bias? Is your takeaway as the president that you would walk out of here and say to your organization, I heard in this hearing this discrimination and bias, and what you might want to do about it? Because I have heard numbers that suggest minority participation back home in states, in localities, do not represent necessarily the numbers that we want. But what did you hear?
Well, I think there is a problem. I mean, the press reports, three things I would talk about as far as bias and discrimination. One, identify the problem. Right now, there's no aggregation of data. How many complaints are actually out there at the state level, civil rights commissions, or with HUD? So that's one.
Was there testimony given today related to that? Because we heard that the numbers don't exist there.
Correct. That's what I'm saying. We need to find that out. We need to get our arms around the size of the problem. If we don't know where we are today, how will we measure success 12 months from now? So there are a lot of anecdotal, a lot of press reports, very concerning press reports. But I have not seen any specific data that tells me the depth and breadth of the problem.
Do you think this hearing today developed that issue? Are you going to walk out and say, well, this hearing produced results that I need to go back, or are you going to have to go back and define these yourself as a result of, as opposed to this hearing producing them?
I think it's important to focus on the issue. It's an important issue. From our perspective, the area of awareness, education, making sure appraisers are aware of unconscious bias. And also one other thing, sir, and that is enforcement. The federal entity, the appraisal subcommittee, when it goes out and does compliance reviews to the various states, it does not check for consistent compliance of our standards. So we write the standards, but if we're not checking on the enforcement of it, we're going to have a problem.
What are they there to do if they're not there to check on
They check administrative matters like how long when a case has been filed, how long did it take you to adjudicate it, and things like that. But they do not.
Does there seem to be bias in that process?
It's a little surprising that it doesn't occur.
That it does or does not occur?
It does not occur.
It does not occur. So perhaps part of what we need to do is to ask the questions of those people that do these audits, and you're suggesting you've not seen that bias that is there.
That is correct.
Well, I want to be very sympathetic to any person that would choose to enter the marketplace in any area that would be important for them based upon their qualifications and desires. And I want to be very much supportive of not just the gentleman's comments, Greg Meeks, but also the chairwoman. I'm simply saying I did not hear these in the testimony that was given today, and would ask, so it'd be my one question for you to go back and to really listen to what Ms. Rice said about things that are embedded in databases. I saw from her testimony some old, what seemingly may have been old data. There was no date that appeared. Where bad terms, for us sitting here today, perhaps if this were 1983, I thought those terms that were embedded in what she brought forth were out of the norm also. So I want to agree with her, but I'd like to have you go back and take a look at the databases that you look at across the country and see what your current snapshot is, because I want to be very sympathetic to the ideas that this bias or discrimination exists. And I want to thank the chairwoman in this endeavor, and think that we need to look deeper for those viewpoints. And I thank the chairwoman for bringing this together today.
You're welcome. The gentleman from Texas, Mr. Green, who is also the chair of the Subcommittee on Oversight and Investigations, is now recognized for 5 minutes.
Thank you, Madam Chair. I too appreciate greatly this hearing today. And I've had some experience with these circumstances. I've talked to realtors and persons who claim that their properties have been undervalued. This starts with the person who appraises the property. Sometimes the attitudes are not such that you feel comfortable with the person you're working with. But let's get beyond that and you get your appraisal. But at some point you decide that this is not an appropriate appraisal, it's too low. You have to now go to your bank. You have to now try to get the person that made the actual appraisal to reconsider. And that attitude that you experienced at the genesis of the process becomes even more prevalent as you challenge the appraisal. Discrimination is illogical. It makes no sense for people to do it, but it happens. And it seems to me that there should be some process by which persons who receive an undervalued appraisal can appeal to someone other than the bank and the person who initiated the original appraisal. So let me ask you, Ms. Rice, your thoughts on some sort of process that gives us at least some third party to appeal to.
Thank you so much, Congressman Green, for the question. And I did want to correct something for the record. The anecdotes and the research in my testimony is all recent. It's not dated information. It's all very recent, within the past couple of years. So your question about the reconsideration process is very important, because oftentimes when consumers experience undervaluation, the first thing that they have to do is go back to the lender and ask the lender to order a second appraisal or have the appraisal reevaluated. And so the call is made by the lender. It's not made necessarily by the appraiser or made by the consumer. If the lender will not grant the request for reconsideration, then the initial appraisal, which may undervalue the property, will stand. So we agree with you absolutely, Congressman Green, that there has to be a reform of that process. And what we are suggesting is that consumers be considered, that the law be changed so that consumers are considered as the intended user for the appraiser. After all, it's the consumer who pays for the appraisal, so the consumer should have the right to request a reconsideration and have that request granted.
Ms. Rice, perhaps the industry itself could do more to monitor these things. For example, if you had some sort of third party involved, some entity that is not vested in this process, you could retract the number of persons who are giving us appraisals that are undervalued. You can then have that information compiled such that the things that have been talked about earlier that we don't have, we could have that information. Your thoughts on, in the reformation process, having the third party, some entity to perform this function of reevaluation?
Well, one of the things that we do agree that the appraisal committee should be elevated to a federal agency, and it could be that third-party agency that you're talking about, Congressman Green, that has expanded and increased authority to provide oversight. One of the things I do want to point out, I mean, a lot of talk has been made about the over-appraisal of values in the lead up to the foreclosure crisis, but I want to point out that most of those abuses, the lion's share of them, happened in the subprime sector, which was not regulated. So we do need appropriate regulation over the valuation of properties.
Thank you, and I'll just close with this. Unfortunately, many people will never experience what it's like to be alone with a person of a different hue who has an attitude, and you're trying your best to appeal to the person. But this person, for whatever reasons, chooses to treat you with disrespect. That happens in this process. I thank you and I yield back.
Thank you very much, Mr. Green. The gentleman from Florida, Mr. Posey, is now recognized for 5 minutes.
Thank you, Chairwoman Waters. Mr. Peter, are there any peer-reviewed studies or meta-analyses of multiple studies that establish a strong case for the existence of racial bias in real estate appraisals?
No, sir, I'm not aware of any of them. I'm only aware of studies that disprove it.
The purpose of a real estate appraisal is to provide an estimate of market value on a property that is prospectively going to be sold or bought. What does your research suggest about the accuracy and overall error rates associated with single appraisals as a reliable metric of market value, and what should be done to improve the overall accuracy of appraisal methods?
Thank you, sir. That's a great question. And what our research has shown is that under appraisal, as they come in, actually provide a great value to borrowers. So if the appraisal comes in far below the negotiated sale price, it provides a consumer benefit because the person who has received, the borrower has now the opportunity to go back and renegotiate the sale price. It gives him power to go back to the seller, and oftentimes what the research found from Fannie Mae finds that the larger the difference is between the actual negotiated sale price and the undervaluation, the larger the revaluation and the greater the consumer benefit. And also the research shows that there's not much drop-off, meaning not many loans that come in underappraised end up dropping off the market. So they are just getting renegotiated and still get done.
Very good. Who gets harmed when an appraisal comes in for more than the actual value that it should be?
Sorry, could you repeat that?
Who is harmed when
who is harmed? I mean,
when an appraisal comes in?
If an appraisal comes in low on a purchase transaction, I mean, ultimately it benefits the buyer, but the seller, of course, they have to renegotiate, and they are losing some money on the sale price. But you cannot have it both ways. I mean, if under appraisals are the issue, then you're providing a benefit to the consumer, and the seller is losing some. But you cannot have it both ways.
Yeah, I would think that, to insist that appraisal just meets the criteria that somebody wants can do more harm to that person than do good. Do you agree with that assessment?
Yes, absolutely. And on refinance appraisals, oftentimes that's the approach comes in at what do you need? And that oftentimes allows borrowers to borrow more than they could actually, could bite off more than they can chew. And what we've seen is there's studies out there from Karami and Wong from UC Berkeley that shows that actually if you wouldn't have all these foreclosures in these neighborhoods, the home price appreciation in white and minority neighborhoods would actually be similar, but it's the foreclosures that bring down the return for these minority borrowers. So that's I think where we need to address, next to socioeconomic status, I think we need to really address the lending practices that exist in some of these minority neighborhoods.
Very good. I appreciate it. And I yield back, Madam Chair.
Thank you. The gentleman from Missouri, Mr. Cleaver, who is also the chair of the Subcommittee on Housing, Community Development, and Insurance, is now recognized for 5 minutes.
Thank you, Madam Chair. Ms. Rice, are you familiar with the term robophobia?
No, sir, I am not.
Okay, maybe I made it up, but the point is there are those of us who have apprehension about some of this new technology, the AI, artificial intelligence, and so we are becoming well known across the country as either troglodytic or we are suffering from robophobia. And so the issue is human beings tend to trust AI as much as they trust other human beings. And so when we talk about, bias, do you believe that bias can be programmed into AI?
Congressman Cleaver, thank you for the question. Yes, absolutely. So AI systems, algorithmic systems, are just a reflection of human performances. AI reflects what happens in the marketplace. And so if there is discrimination in the marketplace, then the AI system or the algorithm, it doesn't have to be an artificially intelligent system. It could be a linear regression system. It will pick up and reflect the bias that is embedded into the data. And so if you have communities of color where there's sort of systemic undervaluation of prices, any algorithmic model that is going to value a property is going to repeat the undervaluation. And in fact, algorithmic systems could actually amplify bias and undervaluation. Now, I heard my colleague here, Mr. Peters, say that he thinks that undervaluation of a property is a good thing for consumers. I don't want my property undervalued because it is not a good thing for consumers in the long run. Accurate appraisals are what we want. That is the goal, not undervalued or overvalued appraisals. Neither are good.
You ought to also practice some psychiatry. Thank you for helping and treating me. Mr. Peter, do you believe that there are dangers in AI, in particular as we think about the issue of appraisals?
Yeah, I think there are some concerns that are out there, and I'm not an expert on this, but I mean, I'd like to add at the same point that you have these models that could also be tweaked without even AI, especially when you have competition between Fannie and Freddie. If they were to be put in charge of these AVMs, they could compete with each other, and it could lead really to a race to the bottom. It happened during the 2000s with automated underwriting systems, where they progressively competed against each other. Everyone thought they were smarter than the other, but because they were in the market, it led to detriments to consumers.
Thank you. Mr. Bishop, do you believe, and actually I don't have enough time for everybody to deal with this, but LBJ pushed through Fair Housing Act of 1968. Is there a need, I mean, for an immediate need to upgrade the Fair Housing Act of 1968?
Well, I'm not familiar enough with the Fair Housing Act of 1968. There is a Fair Housing Act out there right now that appraisers should get educated on. If they haven't, then that's why we're in support of the PAVE action plan recommendation to educate appraisers. Nothing could help an appraiser more than to learn about the history of the housing markets and redlining and things along that line that were completely inappropriate up to this point in time. They also need to learn about their unconscious bias, how to recognize it, and then how to interrupt it so that it doesn't appear in their reports. Fair housing is part of that education along with everything else, and we support that.
Thank you. I yield back the balance of my time.
Thank you. The gentleman from Missouri, Mr. Lukemeyer, is now recognized for 5 minutes.
Thank you, Madam Chair. Mr. Bishop, you're the sole appraiser on this panel, if I'm not mistaken. That is your business that you're in, is that correct?
Yes, sir.
I was a bank examiner for a couple of years, and I was in the banking business for 30 years, as well as the insurance business, and I have looked at, if not hundreds, thousands of appraisals in my time, and gone through lots and lots of situations where people come in and they want you to overappraise or underappraise based on whatever they're trying to accomplish with the mortgage you're trying to get or the insurance they're trying to get. It's interesting to watch the different dynamic of how this all goes on. But I've also got a really, really good friend. One of my closest friends is an appraiser, and he constantly talks to me about the problems in the field itself today, in the industry, with people not wanting to come in because of the restrictive nature of the regulations that came out a few years ago with regards to having to have a college education, have to have 2 years of apprenticeship. I'm not sure if those are still the same, because I know when myself and Mr. Cleaver over here were chairman and vice chair and ranking member of the Housing Insurance Committee a few years ago, we worked on this issue a little bit. So can you tell me the problems that we have right now with the appraisal process of getting educated to become an appraiser that we need to maybe take a look at? I think my friend Mr. Sessions here had a great discussion with Mr. Bunton a minute ago with regards to enforcement. And I think those two go together from the standpoint we need to get the right people in there who have the right education, right balance of this, and then be able to enforce the folks who are bad actors in there to clean it up and maybe do a better job so we don't have this perceived problem we're talking about this morning.
Yes, sir, and that's a great question. As I alluded to or answered earlier, Appraisal Diversity Initiative is one step. The University Relation Committee program the Appraisal Institute has is another step to get the profession exposed to young folks at college level in HBCUs, community colleges, as well as universities. That's underway right now as well. The Appraisal Institute has had the Education and Relief Foundation available for scholarships for women and minorities for a number of years to help them pay the cost of the initial education that licensing requires. That's what ADI does. ADI is simply a scholarship program. There are 150 folks that have entered it. 18 have graduated and been placed with positions to do appraisals as trainees, and another 100 or so in the program right now.
Okay, let me stop right there. I think there's a couple of problems here. One is education, the amount of education that you have to be able to qualify to get your appraiser's license, the amount of time it takes to become an appraiser, the apprentice process, because as you said a while ago, the appraiser himself doesn't want to have a trainee there because it takes away from his time, costs him money, and the person going through the apprentice process really can't afford to have 4 years of education, not be able to get really much of an income for 2 years as they go through the apprentice process as well. I think there's problems there with all that, and it deters people from getting in. And I can tell you, I've got 13 counties in my district, and I'm going to bet that safely 7 to 8 of them probably don't even have a single appraiser in the county. None, period, zero. There's a huge problem with people getting into the profession to be able to actually do the work. And so I think we need to start with and I think we need to work with both the foundation and the Institute to try and find a way to make it not necessarily easier, but to streamline the process here so that people can become appraisers and fill a need here, fill a gap, because I can tell you the time it takes to get one, if you're looking to try and do a closing on a loan, it may take another 30 days to 6 weeks to get an appraisal because of the lack of people in the profession. That's a big problem when you're trying to finance a new home or buy a new home and get it appraised and get it financed.
Yeah, I've experienced that for about 30 years.
Yeah.
Trying to hire appraisers and get them through the initial training process. It's 3 education programs. It'll cost you about $2,500. You can do it over about 3 or 4 weeks if you really press hard. Most people take a little bit longer.
So you guys looking at a new way to streamline this, put some new processes in place, new education requirements?
Right, we're the appraisers, so we don't set the policy for education.
Mr.
The foundation does.
Yeah.
Yes.
Yes, the hearing you referenced a few years ago, since that time we have reduced the amount of experience required for the licensure level from 2,000 hours over 12 months to 1,000 hours over 6 months. There's no more college required for the license level. For certified residential, we reduced the experience to 1,500 hours, and we eliminated the 4-year degree, and now it's an associate's degree or equivalent with 10 classes. And as I mentioned earlier, the simulated training, I think, is real. You don't need a supervising appraiser, no more.
Have you seen an improvement in the numbers as a result of that?
Yes.
Okay, thank you very much. I yield back.
Thank you. The gentleman from Colorado, Mr. Perlmutter, who is also the chair of the Subcommittee on Consumer Protection and Financial Institutions, is now recognized for 5 minutes.
Thanks, Madam Chair. And I guess where I'm coming from is I'd like more education and less discrimination. That's what I'd like to see, so that we have a system that really works for everybody, that there isn't bias against a person, there isn't a bias to go high on the loan, or high on the mortgage or low on the mortgage. So And I represented a lot of appraisers as part of my law practice over the years, both commercial and residential. So this is something, appraisers are really important to the whole process, and we've got to make sure it's as transparent and honest and without bias as possible. And I think everybody who's testifying today would agree with that. But what we have, and so I'll start with you, Ms. Rice. You know, you've given some anecdotes and some other pieces of data within your testimony, including the one you kind of mentioned early in your testimony about the couple where there was a $145,000 increase in the home's appraisal when it was a white woman who greeted the appraiser versus the black man. And, you know, for anybody who sees that kind of differential, it's got to be infuriating. So in your presentation, you have a recommendation for congressional action in your testimony describing how Congress should encourage the foundation to limit discretion and provide more consistency in the appraisal process. So can you amplify that, elaborate on that for me, please?
Certainly, and it's not, there's not one panacea. There are a number of things that need to be addressed. So for example, the common way that appraisers are required to conduct what is called a sales comparison, use the sales comparison approach to appraise a property. Now that standard is set by the GSEs, not necessarily by the Appraisal Foundation. But that sales comparison approach yields more discretion and subjectivity into the process because the appraisers can select which comparables they're using, and then the appraiser also has to use their expertise in order to make adjustments to get the comparable to match the subject property. Well, all of that is, that whole process is highly subjective. So we're advocating sort of using more standardized procedures and policies to select comparables and to determine adjustments. But also, there can be other approaches that could be adopted. You know, we don't have to use the sales comparison approach. And this is something that we did in the insurance industry. We helped move the insurance industry from being more artistic in the valuation of property to a more scientific approach that did involve the greater utilization of technologies to make sure that you're getting the measurements accurate, that you're getting the number of rooms accurate, that you're getting the type of materials accurate, and things of that nature. But it moved to a much more scientific and more accurate approach.
Okay, and you know, I guess back when I was representing appraisers, and this is more on the commercial side, you had sales, you had income, and you had cost. And you looked at all three and, you know, tried to, at this point, you have to really trust the appraiser to take those three things into consideration to come up with an appropriate appraisal. So I guess I'd like to talk to you, Mr. Bishop, and to you, Mr. Button. Have you, you know, in a way to get rid of the bias, potential bias in the system, have you been working with either of you, the Urban League, Fannie Mae, Freddie Mac, to attract a more diverse workforce so that we know that the appraisal, that appraisers across the country look like the country?
Right, absolutely. They should appraisers should mirror the communities, the faces of the communities they work in, and that's the diversity effort. And the endeavors that I mentioned, you know, another problem or another potential roadblock is when an appraiser is a trainee, a client won't allow a trainee to go look at a property, a bank. So I'll have to go look at it with them. They can't go on their own. Even though I determine as their mentor that they're completely capable of inspecting a property on their own, it's the client's regulation, the lender's regulation, that a trainee cannot be the sole person to do the property inspection. So see, there's somewhat of a barrier right there,
yes,
just from the client.
My time has expired, so thank you, and Mr. Bunton, I'll get back to you sometime. Thank you. I yield back.
Thank you. The gentleman from Texas, Mr. Williams, is now recognized for 5 minutes.
Thank you, Madam Chair, and I want to commend you, Mr. Peters, for your testimony and body of work demonstrating that a few bad actors should not be used to label the entire appraisal industry as racist. But before we get into more questions poking holes into this narrative being driven by the Democrats, I wanted to take a second to talk about the President's budget request that was released yesterday. In this proposal, President Biden wants to implement a tax on unrealized gains that he estimates will generate over $360 billion in tax revenue. He wants the IRS to act as an appraiser. Now imagine that. Imagine the IRS acting as an appraiser and assign a taxable value on a variety of illiquid assets. I'm very concerned that this unconstitutional tax is being considered because it sets the President inserting a third party, which is the IRS, which hasn't had quite that good a record in the past on these issues. So to estimate a taxable value on asset instead of the free market. An appraisal value of something is irrelevant if there are no buyers willing to pay for it. I know about that because I'm in the car business. And when we are talking about appraisals in the housing markets, there must be a lender willing to give the prospective borrower the land or the loan based on the appraised value of a home. Now, this two-party agreement doesn't exist in the President's proposal to generate tax revenue based on unrealized gains, and this market is completely removed from the equation. So while we are told this will only affect the ultra-wealthy, we all know that this is not true. If this proves to generate increased tax revenues, the thresholds will be lowered to affect many more people in the future, mainly all people. So, Mr. Bunton, can you discuss the negative consequences of taxing unrealized capital gains?
I think that's a little bit out of my league, sir. I'm not really competent, to be candid with you.
Well, would you like to answer that, Mr. Peters?
I kind of have the same answer, but if I may, sir, I would like to make a point about Congressman Screen's earlier point about finding a third party to perform evaluation of appraisers. And 2 years ago, we have developed a statistical approach at the AI Housing Center that would tell you within a day's work if appraiser A is perhaps biased, if appraiser B is not, if appraiser C is just incompetent. So I would like to volunteer the AI Housing Center for such an approach if FHA, Fannie Mae, or Freddie Mac were to make us the data available on an anonymized basis.
Okay. Well, I'll just say something about negative consequences of taking unrealized capital gains. That's dangerous because they have no cost and they just guess, and and the consumer or the borrower is the one that pays the price. So competition is a form of government protection or consumer protection. And if you have an appraiser who understands true market value of a house, the owner can request a second opinion. Now, this process takes more time and more money and is something that lenders want to avoid as much as possible. Accuracy is extremely important for the lenders, which are the ones that hire the appraisers in order to underwrite a loan for the correct amount. So rather than looking to centralize this process and create more avenues for lawyers to get involved, we should be looking at ways to get more appraisers into the market. We've talked about that today. The bottom line is you create more competition, which basically can drive prices down. And if you have more competition, lenders will have more options to choose from if the appraisers there use consistently undervalue homes. So lenders will choose to do business with the businesses based on their performance and accuracy. The best appraiser will rise to the top, while the others will lose their market share. So a competitive marketplace will drive out bad actors, as it does in everything, and not another layer of government's bureaucracy. So, Mr. Peters, my last question is, what are some of the ways we can increase the number of appraisers in the marketplace so we can ensure this as competitive an industry as possible?
Yeah, I mean, this seems probably a question more appropriately directed at my colleagues here, but I mean, what we've outlined in our previous work is that the appraisal industry should actively recruiting with minority black colleges to diversify the industry. But at the same time, scapegoating the whole industry is certainly not going to be good for finding new recruits to the industry.
Yeah. Well, I will say this, competition is key in anything. If you have competition among the private sector, the consumer decides what the prices are, drives prices down, and takes services up. And that's what we need to be doing. The IRS can never touch that. They don't understand competition, and they don't understand services. So that, Madam Chair, I yield my time back.
Thank you. The gentlewoman from Ohio, Mrs. Beatty, who is also the chair of the Subcommittee on Diversity and Inclusion, is now recognized for 5 minutes.
Madam Chair, thank you. And I'd also like to thank the witnesses for being here today. Madam Chair, a special thank you for being a consistent champion of housing and funding. I was pleased also to see the President's requested $11 billion increase to HUD's budget for the 2023 fiscal year to address the housing challenges in the nation. And we certainly do have challenges that we have yet to overcome, many of which we have discussed or heard from our witnesses today. And that leads me to my first question, which is for you, Ms. Rice. But before the question to you, let me just say thank you as a point of personal privilege in knowing you and knowing that the Congressional Black Caucus Foundation during our ALC gave you a housing award for all of your work. You shared in your testimony anecdotal information about Black homeowners facing appraisal biases. We frequently know and have heard of the stories of Black families faced to whitewash their homes, which means removing all traces of their rich culture and heritage, resulting in the home receiving a higher valuation price than its original appraisal by 40% or more. I've experienced this firsthand from as a child with my father up until now. I believe it's not possible for the uniform standards of professional appraisal practice to say that biases in appraisals are prohibited when individuals are forced to remove traces of their race or ethnicity in order to receive a fair valuation of their home. To you, do you think the basis of the evaluation process should be reevaluated to identify opportunities for potential appraisal bias?
Congresswoman Beatty, thank you so much for the question. Yes, I do.
Okay, let me go to my next question, and I may have time to come back with a follow-up, Ms. Rice. This question is for Mr. Kelker. One of the things most glaring from the PAVE report and all of the witnesses' testimony today is the lack of consistent data collection on appraisals and property valuation over time. As chair of the Subcommittee on Diversity and Inclusion, we've previously issued questions for data from banks, from asset management firms, and insurance companies. And we do this in an effort to promote diversity as well as to promote transparency and to establish a baseline measure for future success in D&I practices, but also for changing cultures and creating equity. Can you explain the impact of data collection of residential property appraisals can promote equity in home valuation? If we have enough time, what would be the primary area of focus when collecting specific types of data for the appraisal industry?
The data that would be collected would be the physical characteristics as well as the market data that is contained in appraisals. But with respect to any individual AMC, I don't think anyone has enough concentration of data to actually be very useful. That data ultimately ends up at places like Fannie, Freddie, HUD through FHA, where I believe it can be accumulated and analyzed and in many ways become useful to the marketplace and for regulatory purposes.
Thank you. Ms. Rice, let me circle back and ask you, how can the appraisal industry mitigate implicit and unconscious bias in the valuation of residential property?
So training on fair housing issues is critically important, and updating the current training that appraisers have to receive we think is necessary. We think that there are gaps in the current training program, but we also have to change the system, because it is in part the system that is driving some of the disparities that we're seeing. So we have to change the system so that we're increasing standardization and more uniform outcomes and more accurate appraisals.
Okay, I yield back. My time is up.
Thank you. The gentleman from Tennessee, Mr. Kustoff, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you to the witnesses for appearing today. If I could, Mr. Bishop, to you, I know that we talked about the PAVE report that was released last week. I think we all know that the regulatory structure for real estate appraisal is outdated. We've talked about that. It's been untouched since 1989. I've worked on a bill that's called the Portal for Appraisal Licensing Act. It's H.R. 5756, which I introduced with Congressman Perlmutter. It's bipartisan legislation that would establish a nationwide cloud-based licensing system for real estate appraiser certification and licensing. It'll also direct the appraisal subcommittee to work with state appraisal regulatory agencies to establish consistent license application and renewal procedures for appraisers. Could you talk about how this legislation, if it were enacted, could increase coordination across state lines, and if it would help the profession?
Thank you, and that's a great question. Absolutely, it would help. I'm licensed in 3 states. I have a primary state right now. In the last 5 years, I've been fingerprinted twice for 2 different states. I have an application renewal, and 1 in January, 1 in April, 1 in June. One is very easy and accommodating. It's almost a formality. The other, I have to recreate basically what I'm recreating for my primary state to give that state, which is duplication, and it takes time to do that. There are a lot of appraisers that are multiple states, as many as 30 and 40. The PAL Act, which we support and really wish that it could get passed, would simply be a data warehousing, a place for all the appraiser data. My fingerprints would be in one place that any state could see. My education would be in one place that any state could see. It wouldn't change the state registration process for the individual states. I would still have to apply, still pay their fees, but all the certification criteria and identification criteria would be warehoused in one spot. And the most important thing about the PAL Act is if I were to get in trouble in my primary state and leave, or be forced or asked to leave, right now I could go to another state and possibly set up and they wouldn't know it because there's no collaboration between them. If the PAL Act were in place, that would go on my record in my primary state and any other state could see it.
I hate to argue against myself, but taking the other side, can you think of any reason or any arguments not to enact the PAL Act?
None.
Okay, that's a great answer. Thank you very much. Mr. Peter, if I could with you, in November of last year, November of 2021, the New York Times published a column about Orange Mound. That's a community in Memphis, just outside my district. So, and it's struggled, but it's a very proud community. From 2009 to 2019, property values in Orange Mound decreased around 30%. Can you discuss, if you would, the impact that that Great Recession had on low-income and minority communities, and why communities like Orange Mound have had a difficult time recovering since then?
Yeah, absolutely. I'm not familiar with your particular community, but I can speak more broadly about lower-income minority communities in general. And what happened was during the run-up in the housing boom during the 2000s, these communities took on a lot of leverage, and a lot of it was government-sponsored or government-driven. And because of this over-leverage, which drove up prices higher and higher, the ensuing collapse in home prices was much more severe in these neighborhoods. And these borrowers also had less financial resiliency to withstand the leverage that was provided to them. because oftentimes they had employment issues, they had health issues, they had marital issues. So once you increase prices in these neighborhoods by the margin that we did, and oftentimes these borrowers got in late in the housing boom. So they got in 05, 06, 07, so they really didn't have much time to build up equity. So they were predominantly hurt and really quickly hurt once the market turned and house prices started collapsing. So they were the last ones in and they were the first ones out. So because of the devastation brought from this, from the financial crisis, you also had a lot of foreclosures. You had a lot of homes that fell in disrepair. And these communities just had a really hard time catching up and repairing some of the damage done that came about from this problematic lending standards, which was much driven by the government.
Thank you, Mr. Peter. I yield back.
Thank you. The gentlewoman from Massachusetts, Ms. Presley, who is also the Vice Chair of the Subcommittee on Consumer Protection and Financial Institutions, is now recognized for 5 minutes.
Thank you, Madam Chair. When we say Black Lives Matter, that must also mean that Black communities matter, Black businesses, Black homes, and Black wealth matters. And yet, the systemic devaluation of Black communities and homes adds up to around $156 billion in lost equity. Equity that could have been invested in education and starting a small business or as a buffer during financial hardship. 97% of appraisers are white and almost 70% are men. And while lack of diversity in the field and individual biases undoubtedly contribute to the discrimination Black people face, the widespread undervaluations of Black homes points to a more systemic issue concerning how we appraise homes and the industry writ large. Ms. Rice, homes in Black neighborhoods are valued 23% less on average than those in comparable white neighborhoods, despite similar characteristics and amenities. The average homeowner in a Black neighborhood loses $48,000 per home due to appraisal bias. Don't you agree that this indicates a wider issue of systemic racism in the appraisal industry?
Yes, I do. There's definitely a systemic problem.
Thank you. So we cannot separate the rampant appraisal bias against Black homeowners from our nation's history of segregation and redlining. When establishing a property's value, appraisers use comparable sales of similar properties in that neighborhood. However, they often select lower value comparable sales in Black and minority neighborhoods, leading to undervalued appraisals. Ms. Rice, even if appraisers use appropriate comparable sales, can you tell us how historical discriminatory practices such as redlining are baked into current property values, perpetuating the impact of past discrimination today?
Well, what redlining does, thank you first of all, Congresswoman Presley, for the question. What redlining does, both lending redlining and insurance redlining does, is it causes a restriction of competition in the market. So you have a decreased number of transactions, you have a decreased number of players in those communities, and some of those communities don't have access to lending or insurance products at all. And so when you rob a community of competition, you're automatically deflating valuations in those communities because you're not supporting the demand that otherwise could be there.
And building upon that, Ms. Rice, how do these compounding effects of low appraisals in a community, how do they dampen home values in that neighborhood, reducing the realized wealth of all homeowners who live there?
Right, well, because the way that appraisals are done in the residential space, the sales comparison approach, in order to assess the property value for your subject property, you've got to rely on values of adjacent properties in that community where the subject property is located. And so if all of the values, or if even some of the values of those properties upon which you're relying for your comparables are deflated, are artificially deflated, that is going to result in a deflation of the value for your subject property.
Thank you, and I yield.
Is it all right if I mention one thing because I'm very familiar with the Orange Mound community in Tennessee. Is that all right if I
Yes,
address
please,
that?
go ahead.
Yeah, so first of all, the Orange Mound community has suffered from decades and decades and decades of redlining practices and discrimination. That community has always had a hyper concentration of subprime mortgage lenders operating in that community. So Orange Mound wasn't subjected to subprime lenders in 2004 or 2005 or 2006. It's always been, just as most communities of color throughout the United States, it's always been subjected to a hyper concentration of subprime lenders in those communities that utilize abusive lending products that drive consumers into foreclosure. So it's nothing to do with government policies or federal policies or anything like that. It was all market-based, and it was all private sector market-based abusive practices that caused hyper foreclosures in the Orange Mound neighborhood and ultimately distressed property sales in that community.
Thank you. The gentlelady yields back. The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, Chairwoman Waters, and thank you to our witnesses for taking time from your schedules to join us today. I'll dive right into my questioning. Under the agency actions to advance valuation equity, the Pavey report describes steps that should be taken for building a well-trained, accessible, and diverse appraiser workforce. It states that agencies should update appraiser qualification criteria and related criteria related to the appraiser education, experience, and examination requirements to lower barriers to entry in the appraiser profession, while at the same time increasing requirements for anti-bias, fair housing, and fair lending training for appraisers. Mr. Peter, does increasing training requirements lower barriers to entry and make the industry more attractive to prospective appraisers?
Well, I mean, I think, first of all, to back up, I think the government has not made the case that there's widespread and systemic bias going on. And I think the evidence in the in the PAVE report is more than flawed. I mean, for example, the FHFA blog post that is mentioned, while there's no excuse for the incendiary language used, but it cites 16 examples out of millions of appraisals that used such language. But the total instances where these are occurring was not provided. So this really suggests to me that the total number couldn't have been very large. Similarly, the Freddie Mac report that the PAVE report relied on, which was entirely contradicted by a study by Fannie Mae and also by a study that we have done in-house. And then the Brookings report that was referred to earlier, which claimed that at the 23% undervaluation in certain neighborhoods, with large minority presence, the study said that by just using 23 control variables, we control for all the differences in home characteristics and neighborhood amenities. That's just a preposterous statement to make, and with our research that we've done, we show that by just adding one additional variable, so going from 23 to 24 variables, by adding the credit score of all the borrowers in the neighborhood, which is a very powerful indicator for socioeconomic status, we can explain away the entire difference that the Brookings study attributed to race to socioeconomic status. So I think we should address socioeconomic status first before we address anything else.
Thank you. And Mr. Bishop, I would also be interested in hearing your thoughts on this question.
Right. Well, obviously, if you increase requirements, then it makes it a longer process, a more expensive process, and anybody looking at it to get in is going to see increasing as a negative. I don't know how they would see that as a positive other than if they were of the mindset that education more is better. But yeah, increasing requirements would be a negative.
One of the action items, the Pavey report, is that HUD will require FHA lenders to track usage and outcomes of reconsiderations of value and to report this data to the FHA so that HUD can evaluate the impact reconsiderations of value might have on possible discrimination. Mr. Peter, Would the cost of increased reporting requirements like this impact the cost of buying a new home?
Well, ultimately, yes, but I think it is not needed. The data already exists. Fannie Mae and Freddie Mac already have the data. 2 years ago, we developed a statistical approach to test every single appraiser in this country for racial bias. 2 years ago, this has not been done. We went to Fannie Mae and Freddie Mac. We suggested to them, do this or give us the anonymized data, we'll do it for you. 2 days later, we could give you the answer if appraiser A is biased, appraiser C is maybe incompetent, and then you do some more investigation of these cases. But that has not been done, so this really suggests to me that there's an ulterior motive which really sets up the stage for federal government to take over the appraisal process.
Sure, and appraisals are typically done under tight timelines, as we know, that buyers and sellers have agreed upon in most cases. Mr. Peter and Mr. Bishop, in the little time we have left, would any of the task force's recommendations slow down the appraisal process and risk sales falling through? And Mr. Bishop, I'll let you go first.
Well, yes, it's timeline-centric, and appraisers turn it in on a deadline, and it's nearly the day before. So, yeah, increasing that could prolong the closings, ultimately.
Mr. Peter?
Yeah, I would agree with that.
All right. Thank you both, and Chairwoman Waters, I yield back.
Thank you. The gentleman from Illinois, Mr. Foster, who is also the chair of the Task Force on Artificial Intelligence, is now recognized for 5 minutes.
Thank you, Madam Chair. Some of the worst damage that was done in the bursting of the housing bubble 10 years ago happened to minority communities where where people invested into houses at the peak of the bubble value. And I would just want to follow up on actually Representative Hill's comments about the damage that can be done by overvaluing appraisals and encouraging people to make decisions which in retrospect wreck their lives. Now, we made some progress in Dodd-Frank with the ability to pay requirements that at least guaranteed that if you kept your job, you could maintain the mortgage payments. It did not protect you, however, from ending up underwater if you invested into a bubbly market. And about 10 years ago, I gave a series of presentations at the American Enterprise Institute on a concept that for essentially counter-cyclical loan-to-value limits, where instead of just using the appraised value, which meant to be a snapshot of what the market value was today, you'd give some look also at the probability that that this was a bubbly market. The simplest way to do this is if the local housing index had appreciated by 20% or 40% in the last few years, you would actually only allow the loan to be made against not the current market value, the appraised value of the house, but what the appraisal would have been 5 years ago or corrected by the housing index. I was wondering, is there, at the time the American Enterprise Institute and I think others had some enthusiasm for following up on mechanisms for making that happen. Is there anyone who are familiar with the state of the art? Yeah, please.
Yeah, I mean, very recently we suggested exactly this countercyclical approach to FHFA in its request for input on its capital rule. So we have taken this concept and proposed it to the regulator, of course, it was unfortunately ignored, but I'm well with you in terms of better mortgage products that build equity much faster, and we have a proposal out there that would, by shortening amortization schedules, so going with a 20 or 15-year mortgage, but providing assistance to lower income first-generation home buyers so that they could offset the difference in payment between a 30-year and a 20-year mortgage. This would allow them to build equity much faster. It would provide basically a vaccine to the entire neighborhood. If prices would decline, it gives people more staying power, and it's not just one person, but if you provide it to multiple people in this area, they could all benefit from each other. And
sure, there was a huge chain reaction in neighborhoods where people would end up underwater, lose their jobs, and the house would get dumped onto the market in foreclosure, and then everyone in the neighborhood would be further underwater and just fed on itself. But the tough part about that is that part of the solution is to say, And when a bubble is happening, you have to say, no, this is a bad thing for you to invest in. You have to buy a smaller house or perhaps no house at all with the amount of equity you have. And it's a very tough conversation, and I think that's one of the reasons why there was some industry opposition at the time. But that is a thread that's continuing, so I'd like to encourage you to keep thinking about that and look at specific ways to implement that, because that was sort of the missing piece in a lot of this discussion.
Congressman, we're going to follow up with you on this.
Okay. Yeah. Any other? Yeah.
Yeah. Thank you so much for your question, Congressman Foster. And one thing that I would like to remind everyone is that, in the lead up to the foreclosure crisis, most of the abuses that we saw, the hypervaluation of properties, occurred in the subprime space, which was highly unregulated. But also, most of the loans that were generated in the subprime space were refinances, not home purchases. So we also have to be careful as we look at the appraising of assets, of properties, when homes are being refinanced as well. That can also lead to grave problems and disparities. And many of the cases that are now sort of winding their way through HUD or DOJ or through the courts, or that are at private fair housing organizations, involve refinance situations. So the Austin family, for example, they were refinancing their home, and that was the situation.
I agree. I mean, some of the most tragic conversations I had were families that were, lost homes they've been in for 40 years.
Exactly.
Anyway, my time is up and yield.
The gentleman from Ohio, Mr. Gonzalez, is now recognized for 5 minutes.
Thank you, Chairwoman Waters, and thank you to our witnesses for being here today and for your testimonies. Let me start by saying something I think is pretty obvious, is that it is important that we identify ways to reduce wealth disparities, and that promoting home ownership and building equity is an incredibly important piece of the equation, especially for young families. It's my hope that we can work in a bipartisan way in this committee and throughout others to incentivize building and help create new pathways to home ownerships for all Americans. One of my favorite sayings that I've always tried to live by is, "In God we trust, all others bring data." I don't know exactly who said it, but I think it's pretty valuable. And Mr. Peter, I want to start with you, because you talk a lot about the data that was used in the PAVE study. And I'd like for you to comment specifically on the quality of the data that was used, what was rejected, and maybe just from your standpoint, if data is ultimately going to help us solve this problem, and I think it is, right? Start with a good set of clean data. Let's see what it tells us, and then let's make the necessary adjustments. Walk me through your sort of analysis, if you will, at a high level of the quality of the data and the analysis used.
I mean, initially we were equally shocked by these reports in the newspapers about appraisal discrimination. But then we thought, well, we could use the data that already exists and that we have within the housing center to really get to the bottom of this. And we ran a statistical approach where we could test the entire housing, the entire market, and we found that systemic bias was not widespread. That's what we found for the entirety of the market.
So was the data that PAVE relied on faulty, or was it lacking context?
Some of the data that PAVE used, which was a study by Freddie Mac, was never released to the public. Once we read the report, we went to Freddie and said, "Hey, could you release the data so we could replicate what you have done, and also we have some ideas that we think would be important to test, namely, what is the impact of socioeconomic status on these differences that you're finding?" And Freddie Mac said, "No, we can't do this." But then we went
Why?
to Well,
I mean, it seems like we'd want that data public. I would love to see it.
I would love to see it too.
I would like
love to see it too.
to have the academic community really analyze this and beat it up, and let's see what's there.
We then went to a third-party provider who had similar access to similar data, and they then the data was still behind a paywall, but we fed them the code that they should be running, and they ran the code for us, and then we discovered the differences that Freddie Mac found and attributed to race-based were not race-based, they were actually due to socioeconomic status.
Okay, so from your analysis, the conclusion is that there are other factors.
There are very much other factors, and we have not really explored them.
So I want to go back to something that I think is sort of the crux of the whole thing, which is we want to close the racial wealth gap. I think that's a noble goal that we all share, and it's been persistent and it's been stubborn, and we haven't been able to sort of crack it. Housing is a component of that, obviously. From a housing solution standpoint, what policies would you advocate for that could help us close the racial wealth gap?
Number one, we need more supply.
Supply of houses.
Supply of houses. Yep. The lack of supply of houses is what's driving up home prices, and it's pricing out lower income minorities from the market. And that's been going on for the last couple of years, and it's a real tragedy. So that's number one. We need more supply, but at the same time, this is not a federal government issue. This is a local and state issue, and it needs to be handled at those levels, and there's already movement in the direction from certain states, California, for example. If California can pass this, anyone else should be able to pass this. Yeah. At the same time, foreclosure-prone lending practices, the practices where you give borrowers more and more debt that they cannot sustain, that is really dangerous. And especially borrowers that get in late in the boom cycle, they are the first ones to get foreclosed on. So we need to break this cycle. And there's academic research that conclusively shows that neighborhoods in minority and white neighborhoods would have the same home price appreciation. So you would be building the same amount of equity, or that's at the same rate of equity. The difference is that minorities tend to default more, and that wipes them out completely. So we need to break that cycle, and we need better loan products. We have the wealth building home loan out there. We have the Lift Home program out there that we have proposed.
So I got 30 seconds. Better mortgage products. I agree completely. Go as deep as you can on that in 30 seconds. What do we need?
So we need to subsidize wealth building and not debt. So down payment assistance, for example, would just get fed through and drive up home prices higher. So if two people want to buy the same home and you give everyone $20,000 more, that would get capitalized in higher home prices. What we are proposing is buy down the interest rate. By buying down the interest rate, you are having you're building up more equity each month. So you're building up this cushion that protects you from foreclosures. So that would be one big step that we should undertake. And if there's federal government money to be spent for it, a limited amount, I'd be fine with that.
Great. Thank you, and I yield back.
Gentleman's time has expired. He yields back. The gentleman from Florida, Mr. Lawson, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and I welcome all of the people to the committee today. And I probably want Mr. Bishop and Mr. Broom to comment on this. There have been many cases regarding discriminatory appraisals from people of color. I remember hearing about a family in Jacksonville, Florida, which is in my district, who wanted to refinance their home and pay down the mortgage. When the appraiser came back with a shocking low estimate, they decided to get a second appraisal with a new appraisal that made the home appear as if the husband was doing the appraisal. He just happened to be married to a Black female. And what they did, they took down all the pictures and everything in the house that would signify that it might be that it was only a white person included. And all of a sudden, the second appraisal went up 40%, which is pretty significant to go up 40%. Mr. Bishop, first, what happened in a situation like this if a complaint is filed with the appraisal company for discrimination, bias? How is it reported and how is the issue handled?
Thank you for your question. And that's important to understand that anytime a property owner feels like they have been discriminated against in the appraisal process, they should do exactly what those folks did, is just start asking questions why, if they truly feel that way. I don't know enough about the situation to be able to render an opinion as to why 40% higher of a conclusion on the second appraisal. But what I can tell you is that if I were to be given the two appraisals and we could understand the scope of work, then we might understand why there was a difference in the conclusion. It could have been a mistake. It could have been a different set of instructions. But absolutely, if the reason was because those homeowners had to take the decoration of their home and change it, that is just unacceptable.
Okay, Mr. Bruton.
I would suggest that they would file a complaint with the Florida Real Estate Appraiser Board. Our standards clearly prohibit bias and discrimination, and that is the yardstick that that board would use on the actions of those appraisers. And they have a wide array of disciplinary actions ranging from a warning letter to suspension, revocations, fines. But that's the recourse that a homeowner would have.
Now, this is a hypothetical question to the panel. I know my time is running down. Does the appraisals sometimes form a relationship with financial institutions, the banks and so forth, and have an expectation from the banks, the financial institution, that they want the appraisals to come in at a certain amount when they're dealing with minorities?
Is that to me
the
as well?
lenders? Yes. I mean, I would like to know, because some institutions only want to use certain appraisers.
Right.
And so is a relationship established that in order for you all to do business, that you have to come in with an appraisal at the amount that these financial institutions are looking for?
The Dodd-Frank Act had a whole section on appraiser independence. This used to be a huge problem. If you don't hit the number, I'm not going to use you anymore. And now it's much more of an arm's length transaction. So if that kind of conversation is occurring, then the federal banking agency that's in charge of that bank should be notified, because that's against the law.
Okay. Anyone else care to comment?
Yes, I would. The structure set up, the regulatory structure set up within most lending institutions now doesn't allow me to talk directly to the lender. I talk to an intermediary, kind of like an appraisal manager. That's where the appraisal management company concept comes in. It puts a wall up between the appraiser and the borrower in both commercial and residential. So I wouldn't even be able to talk to the lender in such a circumstance. And if that's going on around, if they're circumventing that, then absolutely, that's against the law.
Okay. But I have some other questions I might have to submit. But anyway, my time is running out, and with that, I yield back.
Gentleman from Florida yields back. The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Thank you, Mr. Chairman. The appraisal industry is by its very nature somewhat subjective. The metrics we use to measure the value of properties are constantly changing, and the true values of properties varies from buyer to buyer depending on their priorities. I've bought property 11 years ago, and the value has changed over 10x because people are moving into Greenville, South Carolina. They're moving into the upstate from all over the country. We have cranes everywhere. It's fantastic. Let's go to a different part of South Carolina where people are not moving. The population growth, demographics, all of these variables make it really hard to have consistency. But I would say that the appraisal industry overall is doing a good job, and I hope the appraisal we're about to do on the property that I have comes back great. Fingers crossed. But Mr. Peter, I want to ask, is there an opportunity to make use of technology such as automated valuation models to try and eliminate some of this subjectivity?
Yes, and there is certainly already some of that in use. Fannie and Freddie are using now what's called appraisal waivers. So that has started even before the pandemic, but because of the pandemic, it really got turbocharged, where people basically submit a self-evaluation of their property's value. And then Fannie and Freddie check, well, does it fall within our range? And if it does, then you don't need an appraisal. The problem with this is, and we've looked at this in great detail, and so far we have found that it's actually having a salutary effect on the market. But we have found evidence of gaming. And once it becomes widespread knowledge in the marketplace, which it always does, then you could have problems through gaming the system. And especially when Fannie and Freddie are competing against each other for market share, it could really get problematic because they are trying to move out the risk curve a little bit further and further to gain business, of course, at the expense of the other who does the same, who responds in kind. And we have seen this during the 2000s with automated underwriting, where this could quickly spiral out of control, and then you end up with a massive bust.
The gaming, I mean, are they just manipulating factors in the appraisal, or how are they gaming the system?
I mean, what we have found is there is certain amount of bunching at certain LTV points. So, for example, at an 80 LTV, that if you go $1 above 80, you need mortgage insurance. So what we found is at an 80 LTV, generally a value that is awarded with a waiver is much greater than the value awarded by an appraiser. So I don't really know how this exactly happens, but there's some evidence that at these price points at 80, you have the same at 80, at 70, at 60. Every time where the pricing changes, with a waiver, you get a higher valuation. And of course, if someone figured this out at these price points, it's easy to see how this could eventually become widespread throughout the market. And then you end up with waivers awarding higher values across the board than human appraisals.
Are there any standards in place, common data standards for AVMs?
As far as I'm aware, they're not. I mean, this is all in a black box that Fannie and Freddie have, and we think for AVMs to be used, you should have capital to back it up to withstand your losses. But Fannie and Freddie are chronically undercapitalized. They don't have the capital to back this up. So if a private lender is using AVMs, have at it, right? You have the capital to withstand any severe losses. But with the government doing it, there's always the danger that you don't have capital and they get gamed and exploited.
Sure, thank you. The CFPB has shown interest in publishing rulemaking on AVMs. I tend to favor a light touch regulatory system that is very clear in its rulemaking and consequences. The CFPB tends to take the complete opposite tact under this administration. Under Director Chopra, they love to issue opaque and burdensome rules so they can regulate industry by enforcement. What impact would overreach by the CFPB in this space have on the industry, and does the CFPB have a strong record of appropriately regulating emerging technology?
Well, the problem with the government taking this whole process over is always that it could be politicized eventually. And, it's easy to see how you could quickly be misvaluing properties across the whole country for political purposes of increasing valuation in minority neighborhoods, for example. But, of course, if you don't let the market decide what the real value is, you can easily see how you could be driving a housing boom, and then eventually when the party runs out, when the music stops, as it always happens, you're going to have a massive price correction.
So AVMs could be used effectively using appropriately transparent variables and making sure that the algorithms are all, there's no politics in it.
If a private lender is doing this with enough capital, have at it. No problems with AVMs. We use AVMs in our research all the time.
Thank you, Mr. Peter. Mr. Chairman, I yield back.
Gentleman from South Carolina yields back. The gentlewoman from North Carolina, Ms. Adams, is now recognized for 5 minutes.
Thank Chairwoman Waters and Ranking Member McHenry for today's hearing, and to our witnesses.
Ms. Adams, there seems to be a problem with your mic. You might see what happened there. Let's stop the clock for a second.
You hear me now?
Just barely. We heard you loud and clear for a second or two, and then it kind of was muted or muffled again.
So what about now?
Just barely. Yeah.
Well, can you hear me now?
Getting better.
Can you hear me now?
Just barely. I think what we'd like to do is move on to Mr. Davidson and then come back to you, if that's okay.
Yeah, Mr. Chairman.
Oh, now we can hear you. Now we can hear you.
All right, great. Well, thank you so much. I want to thank Chairwoman Waters and Ranking Member McHenry for hosting the hearing. To our witnesses, thank you as well. For far too many of our neighbors pursuing the American dream, a decent, affordable place is just that, a dream. I am proud that this committee is working with the Biden administration on the PAVE task force to help turn what is too often a dream into reality. Collectively, one common thread I've heard today is that we don't want bias. We all want to treat people fairly. We all want to make sure that our neighbors and friends and families can enjoy the fruits of their labor in the comfort of their own fairly appraised homes. And one of the ways we do that is straightforward. We need to train, we need to recruit, and we need to retain more diverse talent. One of my proudest efforts here in the Congress was founding the bipartisan HBCU caucus. That's HBCUs for historically Black colleges and universities, which I chair with French Hill of Arkansas, who serves with me here on the Financial Services Committee, and he's been a great partner as we fought to secure resources. In fact, I attended his HBCU summit in Little Rock this past October, and we shined the spotlight on the need for companies to strengthen their pipelines of diverse talent by working with our HBCUs. That's the essence of the HBCU Partnership Challenge. That's what it does. We facilitate those connections, and that's why for my 5th annual Esteemed Days of Action, which is going on right now, we're convening members with the HBCU presidents, corporate partners, and members of Congress. So, Mr. Bishop, in your testimony, you discussed your appraisal diversity initiative. And I'm glad to see that you're thinking seriously about how to diversify your workforce. So my question is, to what extent have you tapped into HBCUs to help build a diverse workforce? And how can we help you and your colleagues in the industry further your efforts?
Thank you, Congresswoman Adams. That's an awesome question, and the answer is in our University Relations Committee. We have reached out to HBCUs as well as community colleges and universities, and we are placing ambassadors in each of those educational facilities, and those ambassadors will be our members who will introduce the appraisal profession to their students. And I would welcome any help. I can put you in contact, if we can communicate, with the member who is the chair of the University Relations Committee, and he is right now in the middle of that process of identifying contacts at the schools and HBCUs as well. And if we need help there, it would be greatly appreciated.
Well, we've got the expertise, and we certainly are willing to do it. Thank you so much. Mr. Kelker, in your testimony, you also discussed the need to retain and train a diverse future generation of appraisers, and I completely agree with that. So to be clear, you have an obligation to every American to do so. My question, have you and your colleagues partnered with any HBCUs or other schools to begin training that diverse future generation of appraisers that you're looking for? And if not, how can we help you do so?
Well, I would say to date, we have not done a partnership with college campuses, and largely because our qualification requirements are determined by our client base. And at this point in time, we are not allowed to use trainees or people with less experience yet. So until we can do something with some of those requirements, it's difficult to work on a pipeline of people that we can't use.
Thank you so much. Thank you, Mr. Kelker. And I've got about a minute left, so if I may yield whatever that remaining time to Ms. Rice to respond to the comments that Mr. Peter made about existing research in this area.
Thank you so much, Congresswoman. So yeah, I take exception to the AEI's approach to research in this area, because what they're doing essentially is applying certain socioeconomic factors that are highly correlated to race to try to mitigate away or explain away disparities, real disparities that exist in the marketplace. So for example, Mr. Peter mentioned credit scores. And if you just add credit scores into the equation, then it explains away the disparities that we're seeing in property valuations. But credit scores are highly correlated to race and racial composition of the neighborhood, but appraisers don't use credit scores when they are assessing the property value. It would be highly inappropriate for them to do that. And so that approach
Ms. Rice,
is not an effective
Ms. Adams' time has expired.
I'm out of time. Thank you, Mr. Chairman. I yield back.
Gentlelady from North Carolina yields back. The gentleman from Ohio, Mr. Davidson, is now recognized for 5 minutes.
I thank the chairman. I thank the chairwoman and the ranking member for scheduling another hearing on housing, but at least it's a new topic on how we appraise the value and to the extent that race is a motivating factor in valuations. Valuations have sort of a trade school kind of an approach. There's a right answer within a range. And so when you look at disparity in valuation, I think it's interesting to see some of the research that you've done, Mr. Peter, in this space. There are lots of correlations. Ms. Rice, you highlighted that, and maybe that's where we can pick up. Frankly, you in your testimony, you cite a Brookings study from 2018 to support your claim that there's an inherent bias because somehow there's a disparate impact in valuations. I'm just curious, when you look at the granularity of that, you picked up on credit scores as a factor, but to what extent do you see that? You can continue your thought, Ms. Rice, but also in the same neighborhood, same block, do you get a different valuation on a comparable property? And so there are certainly some things that we should be alert to, but could you address that?
Certainly, and thank you so much for the question. And so we did, in part, base our analysis on the Brookings Institution study, but we also based it on the analysis done by the Federal Housing Finance Agency, which found that in thousands of appraisals recently conducted, that there existed inappropriate language and references to race or racial composition of a neighborhood or the racial demographics of a neighborhood. We also based it on the Fannie Mae study and the Freddie Mac study. So there are multiple studies.
Yeah, so
that
I appreciate what you cite, and maybe, Mr. Peter, I just give you a chance to respond to that, and I appreciate the research that you've gotten. Maybe you could clarify what your point is there.
Yeah, thank you. So in regards to the FHFA blog post, it cited 16 examples, and it said out of millions of appraisals, and there were thousands of instances, but it also cited there were a lot of false positives. So the fact that it didn't provide the exact number suggests to me that it cannot be very large. So that's number one. The second part is about the Brookings study, as credit scores was just mentioned. And there was a study done by the Federal Board, by the Federal Reserve Board, so not just a research study, but underwritten by all the governors. And from 2005, that found that credit scores are not that credit scores are race blind. So that's the evidence, that's a fact. And similarly, in the Brookings study, they use single mothers with children under 18 as a control variable, as an explanatory variable. So this, of course, is very much correlated with race too, but it's hard to, so if Brookings is using it, why cannot we be using credit scores? And in regard to your point about location is very important. And even if you have the same home, identical home, newly built, right next to each other, but one that has beach access, the other one doesn't have beach access, you could easily see how that could really be affecting home valuations. And the Brookings studies has nothing in there that controls for natural amenities. So that's another flaw of the study.
Yeah, location, certainly a huge factor there. And I think, there are some things that we could probably disagree on and certainly have for a couple hours now. But I think one of the things we can't disagree on, if there is discrimination, there is legal recourse. So we've already made it illegal to do this activity. So if we identify it, what's the state of lawsuits? What kind of lawsuits are being brought for this kind of discrimination? We're having a hearing on it. Is it all throughout our courts, all over the country, Mr. Peter?
I mean, I'm not very familiar with lawsuits. I don't think there are many instances. I mean, based on our data, which suggests that discrimination, racial bias by appraisers is not widespread and systemic. So I think that's where we should be starting.
I'd like to just slightly shift our focus to kind of go, where's the housing market headed? So I recently saw an interview by Gary Berman from Tricon Residential where he discussed the shift in housing demand, specifically pertaining to millennials. And Berman stated that on a weekly basis, there are roughly 200 to 300 homes available, and that his company gets roughly 10,000 leasing inquiries. Berman attributes much of this demand to millennials who desire to move into, quote, turnkey dwellings where the burden of maintenance is on someone else. So I have two questions. First, do you agree with this? And then second, what are the long-term implications for the housing market?
I mean, the long-standing problem is that we've been not supplying enough housing. And what's been holding back the supply is really government regulation, especially on the land use front. So if we were to allow moderately higher density in areas around walkable commercial areas, I think that would make that would make a large impact.
Yeah, thanks for addressing supply. My time's expired and I yield back.
Gentleman's time has expired. He yields back. The gentlewoman from Pennsylvania, Ms. Dean, is now recognized for 5 minutes.
Thank you, Mr. Chair, and thank you to all of our witnesses for testifying today about disparities in home valuations. I want to take a moment to step back and reiterate why we're having this hearing. In our country, home ownership is rooted literally in the foundation of our country, and it is and remains one of the most important tools for families to build wealth. It can mean having the means to help pay for your kids going to college, to help you retire with dignity. And in fact, for decades, our government policy supported white families in becoming homeowners while excluding families of color with the same opportunity. Now, as we look at appraisals today, regardless of some of the arguments on the data, it is nevertheless clear that families of color are too often not getting a fair shake. And I don't understand an argument that, oh, a low appraisal might do you some good. That seems really insufficient, puzzling, and disappointing to me. I represent a district in the suburbs of Philadelphia. Multiple studies have found that in Philadelphia, homes in black neighborhoods are devalued by 27% compared to similar homes in white neighborhoods. Ms. Rice, can you speak to the impact of this chronic under-evaluation, particularly the compounding effect in terms of wealth building?
Thank you so much, Congresswoman Dean, for the question. So certainly in individual instances, it can be devastating because a person could lose the ability to purchase a home if the property is underappraised. But in a refinance situation, the family could lose the ability to lower their monthly debt. They could lose the ability to access debt to send their children to school or to start a business. And ultimately, the lower property valuations translate to tens of thousands of dollars per family of lost wealth for that family, lost wealth that that family could use in order to sustain them through financial difficulties and other kinds of issues.
And over time, over decades, in terms of if you wanted to move up to a larger house, if your property value is chronically and unfairly held back, it will limit your ability and your mobility. Mr. Bishop, how do we ensure that appraisers clearly understand their obligations under the Fair Housing Act and the Equal Credit Opportunity Act?
Thank you for your question, Congresswoman Dean. The education awareness, it's in our canons, it's in our ethics, it's in our guidelines. We've just amended the canons, we amended the guidelines, we've enhanced our ethics to address those situations more stringently than we had. We basically, you know, it's good for any business or any entity that's been around a long time to revisit their bylaws, regs, structures, things like that, and that's what we've done. And we're going to continue to do it. We have an education that we're developing right now for our members to take in those areas that you just addressed in question.
Thank you very much. And this, if I can, I'll try to fit in both Mr. Kelker and Mr. Bunton. The demographics of the appraisal industry do not reflect our country's diversity. We all can see that, and the numbers sadly support that. Appraisers are overwhelmingly white, male, and approaching the age of retirement. I say that not as a statement of any insult, but just as a statement of fact, and a lack of diversity is impacting property values and appraisals. So let's start maybe, Mr. Kelker. How are appraisal management companies engaging in diversity and inclusion efforts?
Well, as a matter of course, we attempt to recruit as broadly as we can, specifically in markets where we believe that they are underserved or the coverage is thin. But just given the numbers that have been discussed during this hearing, there are very few candidates that are available. And during the last couple of years, when the market has been as hot as it has been, we've had trouble recruiting anyone because everyone is busy. I think the real solution is to improve the number of people coming into the profession so that there is a greater pool to recruit from.
And do you have 2 seconds, Mr. Bunton?
Your mic.
For the simulated training that I talked about before.
Terrific. Thank you very much. That's what I was thinking, back to education. And I yield back. Thank you, Mr. Chair.
Gentlelady's time has expired. She yields back. We've been going for 2 hours and 45 minutes. I think it's time to let the witnesses stretch their legs. And so without objection, we'll take a 5-minute recess. Would take their seats, please. Thank you. Okay, we'll begin again. The gentleman from California, Mr. Sherman, who is also the chair of the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets, is now recognized for 5 minutes.
Seems that we're dealing with two separate issues here. One is whether certain neighborhoods are underappreciated, and the other is whether individual houses are given a low value just because an African American or Hispanic family lives there. Ms. Dean points out to us that neighborhoods in Philadelphia that are predominantly populated by people of color tend to appraise for 27% less. A low price might be good for the buyer. It's bad for the seller. It's bad for the refinancer. But a low appraisal doesn't do anybody any good. But we should not blame appraisers for the racism that has existed and continues to exist in our society. An appraiser looks at a home and accurately determines that it's going to sell for $300,000. They can't give that an appraisal of $400,000 by saying, if it hadn't been for the racism that led to the road being here instead of there, if it hadn't been to the racism to have the trash dump here rather than there, then the house would be worth $400,000. The appraisal industry has to deal with a society where racist decisions have led to certain neighborhoods selling for less than they otherwise would. And racism is not just something that existed in the past. It exists today and has an effect on whether property sells in one neighborhood for less than it would sell the exact same physical structure in another neighborhood. I want to focus, though, on the issue of undervaluing a particular house because it seems that the seller is a family of color. We had the widely publicized example of bringing in an appraiser while there are pictures on the walls of an African American family, taking those pictures down, putting a different couple sitting there as if they're the owners, putting up pictures of a white family, and the house appraising for more. Mr. Peter, I'm sure you're familiar with those reports. Do they reflect a tendency of appraisers to undervalue a particular house simply because it seems to be inhabited by an African American family?
Thank you, Congressman. So I certainly believe that there are instances where appraisers are biased. However, our research based on 240,000 loans, which is the only study that has actually used big data, shows that there is not such that this bias is not systemic and widespread. And there's also academic research that has backed this up as of recently. And Fannie Mae research comes to the same conclusion. So I think when we find under appraisals in largely minority neighborhoods that Freddie Mac pointed out in its research, once we start controlling for socioeconomic status differences.
Yeah, I'm in my questioning here, I'm not looking at whole neighborhoods. I'm saying the same house in the same location gets appraised differently. I'll ask Pledger Bishop to also respond to this. Is this just one idiosyncratic article, or is there more evidence to say that an appraiser would appraise a house differently based upon the ethnicity of the pictures on the wall?
Thank you for your question, Congressman Sherman. I've heard of those stories and read about those stories, and that's about what I know. I know about the allegations, and and if true, if that's really what happened, and if the appraiser did that because they are biased, then that's unacceptable, and they should be taken care of. You know,
That's a problem more likely to affect cities other than Los Angeles. So much of Los Angeles is tract homes. And for an appraiser to look at the Milan model in the, of home where, there are 50 identical homes in the neighborhood, and come up with an erroneous appraisal is going to be very different than in some of our older cities where the homes are one of a kind.
Mr. Sherman, Mr. Sherman,
here in Washington, yes.
Your time has expired, sir.
Thank you.
The gentleman from California yields back. The gentleman from Illinois, Mr. Garcia, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and the ranking member. I want to thank all the witnesses for joining us today to address the issue of home appraisal bias and discrimination. In 2021, Latino home ownership rate remained steady, and Latinos are projected to represent half of new homeowners in the next decade. However, discrimination against Latinos in the appraisal process poses a serious harm to our community and contributes to the widening wealth gap in our nation. Communities of color deserve the opportunity to purchase or sell a home at a fair price to build wealth. We must take action so that Latino and Black communities are not shortchanged by a discriminatory system that aims at keeping neighborhoods like the ones I represent segregated and undervalued. A question for Ms. Lisa Rice. In your testimony, you referenced qualitative research that has displayed appraisers as active participants of discrimination against communities of color. One appraiser assumed neighborhoods were, quote, getting better and housing values were increasing because of all the Mexican people moving out. I represent a district with working class Latino and immigrant families, communities, and this community has been hit hard by gentrification and displacement and discrimination within the appraisal process. Can you speak to the impact of discrimination in the housing market and how that has perpetuated gentrification and the undervaluation in communities of color?
Thank you, Congressman Garcia, for the question. Yes. So discrimination has very debilitating impacts, not just for the individual consumer involved, because when an individual consumer experiences discrimination, they can be denied a housing opportunity. And we know that home ownership leads to stability and other great benefits for families, particularly families with children. So, for example, home ownership for families with children leads to higher educational attainment for children. There are many, many benefits to home ownership. And so denying people the opportunity or doing anything that would result in denying a person an opportunity for home ownership has debilitating impacts for that family, but it also has debilitating impacts for a community. And let me say, you know, I don't think that most appraisers are discriminatory or out there practicing discrimination, but I definitely think that we have some systemic issues, and we also have some appraisers who are engaging in behaviors that they should not be.
Thank you for that. A question for Mr. Bishop. The issue of discrimination at every point in the housing market, from loan applications to appraisals, are exacerbated by the lack of diversity in the housing and appraisal fields. A recent report found that 85% of appraisers nationwide were white and less than 5% identified as Latino. Can you speak towards the major challenges for recruiting diverse appraisers and what more can be done to shift these numbers?
That's an excellent question, Congressman Garcia. And as I've said before, we have ADI, we've got the Appraisal Institute's AIERF with scholarships. Those are scholarships. We've got our efforts in the universities to promote the profession at that level. And other than that, the obstacles to this are simply the time required and expense required in just obtaining a license. And then post-licensing, getting the experience. We've talked about it. PREA should satisfy the experience part. The ADI initiative, the Appraisal Institute's Education Relief Fund, should provide opportunities in the cost arena. So short of that, we have to promote the profession as viable for entrance into the profession and introduce it. And that's the tricky part. Believe it or not, the most, in my experience, in my world, it's second job, third job opportunity folks that find appraising and want to get in. So they're not coming out of the university. So we have to find those folks too and try to promote the profession in order to diversify. And this is a top priority for the Appraisal Institute. Our strategic planning, our board adopted a new strategic plan in the last quarter, and diversity was one of the top initiatives from that strategic plan.
Gentleman's time has
Thank you
expired.
for that. My time has expired, Mr. Chairman. I yield back.
Gentleman yields back. The gentlewoman from Texas, Ms. Garcia, who is also the vice chair of the Subcommittee on Diversity and Inclusion, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and I want to thank the chairwoman for bringing this really important topic to our attention and giving us an opportunity to discuss it. And I must say, Mr. Chairman, that I feel a little kind of almost distraught at some of the comments that I've heard, and I apologize that I've been bouncing back and forth from here to judiciary, that I didn't get to hear them all, but it is, it's just perplexing to me why we are where we are today on this issue. It doesn't appear to be a new issue, and I don't know how long these groups have been working on this issue, but it's really disheartening to see that we are where we are today. And as it's already been said by so many others, this is about building generational wealth. It's about, especially minorities, gaining access to a home and then passing it on to their children, being able to sell it, being able to leverage it. And it's unfortunate that the appraisal process has proved to be unreliable and consistently holding back minorities who seek to make this close the wealth gap and build the financial home ownership. We've already heard all the numbers, and I'm just going to repeat the numbers again of the number of appraisers, and not out of 80,000 appraisers, 97% are white. I don't think I've seen that number in any other sector. Why? What is it that you all have not been doing that you should have been doing 10 years ago? This is now a very structural issue. 4% Latino, 1% Black, and 1% Asian. And then the breakdown with male and female is 69 to 30. And then I heard Mr. Kilker say that, I think I heard him say, I'm hopeful I didn't hear it right, that somebody tells you that you can't go to the universities to recruit. Is that what you said, sir?
That's not what I said. What I said was that our clients really determine who we can use in terms of experience, and so someone coming right out of school generally does not have enough experience. They're a trainee, would be a trainee, or with insufficient experience to be approved to do work for pretty much any of our clients.
I thought I heard you say that you weren't allowed to recruit when you were responding to the question about recruitment at historically Black colleges, and I'll add, Hispanic serving institutions. Do you actively recruit at these universities to try to get it down from the 97.7% white?
We don't recruit at colleges. We recruit generally in the marketplace where we're looking for experienced appraisers.
I mean, that's the thing that I find so perplexing. If we know we have a problem, what is stopping you from recruiting at colleges? I'm not understanding.
I think what I'm trying to convey is that recruiting at colleges, while we could recruit, we could not use those individuals until they get licensed and get a sufficient experience to meet our clients' requirements.
Well, I see we're not making any movement here, so let me ask the two folks that mentioned scholarships. What kind of scholarships are they? How many do you have? And are you actively recruiting at HBCUs and at Hispanic serving institutions to make sure we do get minority appraisers?
Yes, we are. And the scholarships are plentiful. They would cover initially they'll cover the education.
And do you go to the colleges to make sure they know that there's scholarships available and there's a career track there for them to seek?
That's what the ambassadors and the appraisal.
And how long have you been doing that, sir?
This is we've been in universities. This is a concerted effort at consolidating and identifying in the universities so that we can.
Sir, the question was, how long have you been doing this?
Right, it's
because the numbers do not reflect that anybody's doing anything.
We started with the university relations 2 years ago.
All right, and what about you, sir? You put your hand up real quickly.
Yes, we are starting it this year when we roll out this simulated training, so that we'll have the education, simulated training, even sit for the state exam. There's a lot of corporate interest in these scholarships for minorities and for veterans.
But you're just starting this year. What is your goal?
Our goal?
Yes, what is your goal? What's your target?
Our target is, we did a diversity study of the profession last year to see if all those numbers we hear from Bureau of Labor Statistics are the same. Our goal is to make appraisal profession look more like America. So we're going to start with, depending on the corporate support that we get, as many people as we can possibly get through the system.
Mr. Chairman, my time is out, and I did have a question for Ms. Rice. I'll submit it for the record. Thank you, and I yield back.
Gentlelady's time has expired, and she yields back. As she sits down, the gentlewoman from Michigan, Ms. Tlaib, is now recognized for 5 minutes.
Thank you so much, Chairman, for taking your time and recognizing me. Thank you so much, all of you, for really leading this important effort. I know in Michigan, we know just how important homeownership is in empowering communities of color to build wealth. Wayne County, the communities that I represent, all 12 are in Wayne County, Michigan. And we've lost more black homeownership than any other state in the country in Michigan, but Wayne County really was hit the hardest. I was alarmed but not surprised to read Detroit's Future Cities report, which, Chairman, if I may, I would like to submit for the record, this week on homeownership in Detroit, which found that black mortgage applicants were consistently more likely to be denied more than white applicants across all income groups. In fact, upper income black applicants were denied more frequently than moderate income white applicants. The most frequent reasons cited for denial were credit history and appraisals. We all know this is unacceptable. I know my folks are really tired of being studied. They are exhausted in the task forces and the commissions. We already know what the issue is. Very little has been done to minimize and monitor the appraisers' use of discretion, particularly with regards to fair housing. And I think we've seen the harms that approach has caused to residents in communities like mine. And again, Chairman, if I may, I would like to submit for the record, Chairwoman, Detroit Future Cities report.
I'm sorry, would you repeat? Do you have something you want to enter into the record?
Yes, ma'am.
Without objection, such is the order. Thank you.
Mr. Button, how can the uniform standards of professional appraisal practice be improved to limit discriminatory appraiser discretion and mitigate fair lending risk?
Our standards board is actually reviewing the ethics rule right now to make sure it's abundantly clear. One of the things that we want to make sure is that people understand that they file a complaint with their state appraiser regulatory agency, because most agencies publish the disciplinary action. And that will be a huge deterrent for appraisers when they see their colleagues being disciplined by the governing body.
Yeah, no, like telling on them. Yeah, that's good. Ms. Rice, in your view, what would be the benefits of minimizing and monitoring discretion in the appraisal process?
I apologize, I didn't hear the
Oh, that's okay. I talk really fast. I'm sorry. Ms. Rice, so what would be the benefits of minimizing and monitoring discretion in the appraisal process?
So minimizing discretion would lead to more standardization and uniformity in the process so that We remove subjectivity. Discretion and subjectivity have been found in thousands of fair housing cases to lead to discriminatory outcomes.
So I know you heard a little bit about my district, but also in my district, the condition of our housing stock presents an additional challenge to mortgage lending and appraisals. Much of our housing stock was built in the early and mid-20th century and in need of costly repairs. In fact, more than half of the homes in my district are valued less than $100,000. Detroit Future Cities report found that in some Detroit neighborhoods, unoccupied homes need an estimated about $80,000 to $120,000 just in home repair, while a house itself may be offered at $20,000 to $60,000. There are very few home improvement loans available to my residents, just like many of our folks across the country, and residents are denied at a higher rate than those for home purchase. It's clear that the system isn't working for communities like mine, and so Ms. Rice, do you have any recommendations for how the appraisal industry should address this gap in home valuations created by home repair needs?
So it would be extremely difficult for the appraisal industry to be able to address those kinds of gaps because they are so deep and they are caused by so many errant factors. And so that's one of the reasons I'll just say that we have supported things like the Neighborhood Home Improvement Act, Investment Act, excuse me, to make up that gap that is needed for those repairs.
With that, anybody on the panel, are there ways that we can better integrate home repair needs into appraisal and home mortgage process? This is something that continues to come from much of the members of the Housing Justice Work Group that I created, is how do we address that? Any other ideas and policy changes?
Yes, so there's a mortgage product called an acquisition rehab mortgage product. And so what happens is the appraiser will assess the value of the home after the repair is done. If that after repair value comes out where it needs to be, then the loan can go through. The homeowner can purchase the house and rehab it.
No, thank you so much. It's a very, very important hearing. I appreciate it. I yield, Madam Chair.
Thank you. The gentlewoman from Georgia, Ms. Williams, who is also the Vice Chair of the Subcommittee on Oversight and Investigations, is now recognized for 5 minutes.
Thank you, Madam Chair. Unfortunately, the City of Atlanta in my district leads the nation in the racial wealth gap. Addressing the root causes of the racial wealth gap will help us create the promise of the American dream for all, regardless of their race or zip code, while adding trillions in output to our economy. One of the biggest roots to address is disparities in home ownership, which account for 27% of the Black-white racial wealth gap. Unfortunately, bias and discrimination in appraisals have systemically lowered home values in neighborhoods that have more residents of color. Across generations, this has inhibited wealth building for Black and Brown communities. Mr. Bishop, how important is it for the appraisal industry to be reflective of the neighborhoods they're assessing across our country to help end systemic undervaluation of homes in neighborhoods that have more residents of color?
Thank you for your question. It is very important. Diversity is one of our top initiatives in our new strategic plan, and I've gone through, several initiatives to try to promote diversity, including community colleges, HBCUs, our University Relations Committee efforts, ADI, and our Appraisal Institute Education and Relief Foundation scholarships. In addition to that, the PARIA program is envisioned to open the doors for the experience component of licensing to allow individuals entering the profession a quicker path to licensing.
Thank you, Mr. Bishop. I'm currently working on legislation to help expand the appraisal workforce, including adding appraiser trainees to the National Registry of Appraisers. By doing this, we can ensure that more trainees can gain experience and become licensed. So, Mr. Bishop, to follow on that, how can an effort like this to better integrate the trainee pipeline help recruit and retain more diverse appraisal professionals into the industry?
Well, I would expect that as more new entrants of diverse individuals, people of color and women and other minorities are entering the program or the profession, they should be talking this, telling their colleagues and their peers about this, which should generate more interest to create more diversity. And so that would be one place where it would start. Another place where we might be able to help this is to get some of the clients that I work for to allow trainees to do some of the inspections and do the appraisals. We heard Mr. Kelker already talk about how their clients won't allow trainees to be considered for their business model. And so we get that in my market a lot with the folks in my office, the trainees, which takes longer for them to get their experience hours to get licensed. So that would be another area where acceptance of a trainee in the appraisal jobs that are out there would help as well.
Thank you, Mr. Bishop. Ms. Rice, what other common sense steps can be taken to ensure that efforts to resolve appraiser shortages also serve to significantly increase diversity in the industry?
Thank you so much for the question. There are many steps that can be taken, but the one that I will mention here is the increased use of technology. Now, that it will not be a panacea, and we have to make sure that the technology is de-biased, and there are plenty of mechanisms for doing that. My agency, the National Fair Housing Alliance, just released a new framework, a state-of-the-art framework for effective monitoring of algorithmic systems to make sure that they are de-biased. But increased use of technology can help us build more science into the process, more uniformity into the process, and more accuracy into the process.
Thank you, Ms. Rice, and thank you, Madam Chair, for leading in this work as we continue to close the racial wealth gap in this country.
Thank you. Will the gentle lady yield to me? Thank you. I'd like to ask a question. Could you tell me what are the qualifications for being an appraiser? What do you require?
For the entry level, for the license level, it's 1,000. Well, it's 150 hours of valuation education. That's classroom hours, not credit hours. It's 1,000 hours of experience over 6 months, and then you must sit and pass a state exam.
So you said you reduced the requirements from 4 years to 2 years.
That's for the next category. That's for certified residential. For license, there's no college requirement whatsoever.
So experience counts a lot.
It does.
And how much experience do you have to have if you have very little college?
You have 1,000 hours of experience over a minimum of 6 months. That makes you minimally qualified.
So over a period of 6 months that you have done what?
You have worked with a supervising appraiser to essentially learn how, in the field, to perform assignments, because the real estate, there's such a variety out there, you need a certain amount of seasoning.
And so if you have experienced realtors, do you know what a realtist is?
Yes.
Okay, if you have experienced realtors, say they've been there in the business 5, 10 years, how does that experience count?
I don't really know.
It doesn't count. We're going to talk about it later. Thank you very much.
Mm-hmm.
Okay, the gentleman from Massachusetts, Mr. Auchincloss, who is also the vice chair of the full committee, is now recognized for 5 minutes.
Madam Chair, I'm happy to yield some time back to the chairwoman if she wants to continue that line of questioning.
Well, thank you very much. I'd appreciate that, because what I'm thinking is we have a lot of experienced realtors, and it seems as if there are ways by which people could basically become an appraiser without having formalized education, and I want to know how it all works.
It's something that our qualifications board has looked at for a long time. There are many people in the real estate industry, so to speak, that have a certain...
How does that experience count?
It doesn't count right now.
So if you're a realtist and you've been doing this for 15 years and now you want to become an assessor, you have to start from scratch and get some training and education?
Yes.
Thank you very much. I yield back. That's what we're going to deal with.
I appreciate the chairwoman calling another edifying hearing on housing issues, and for this and any other subject on housing, I feel compelled to start with the imperative as we look to lower costs for families in America, and as we look to rectify the injustices of redlining and other discriminatory measures, that we build more housing. We need to build more housing in this country. My home state of Massachusetts, I regret to say, is one of the laggards here. In the last 20 years, in the greater Boston metropolitan area, round numbers, we've created something like 2.5 jobs for every one housing unit. And you don't need to be an appraiser or a PhD economist in housing issues to understand what happens next. Housing prices gallop by double-digit inflation, and it's lower income Bay Staters who are left behind disproportionately, people of color. So we need to build more housing. I'm proud to say that the Housing Choice Act in Massachusetts is making progress there, but it needs a whole of government effort, including, in my opinion, tying infrastructure funding at the federal level to liberalization of land use regulations at the state and local level, because the federal government needs to have leverage here. Turning now to the issue at hand, Mr. Bunton, for you first, please. Following the housing crisis, Fannie Mae conducted a study about the accuracy of appraisals during the home buying process. And this study found that 2 appraisers can evaluate the same home at the same time of day, but that knowledge of the contract price can affect its valuation, that there's significant confirmation bias. Now, Fannie Mae and Freddie Mac, they hold the majority of residential mortgages, north of 60%, and we know that information like that from any federal agency should help guide policy and standards. Based on this report, did your organization put in place new standards to reduce confirmation bias?
No.
If you'd like to follow up on the record with any approaches you might take in the future to reduce confirmation bias, I know the committee would appreciate that.
Will do.
For Mr. Kelker, an AMC, an appraisal management company, is supposed to provide a barrier between the lender and the appraiser to decrease influence improperly. Do you think that this barrier has affected confirmation bias?
I don't know if it's affected confirmation bias. I think when an appraiser has a purchase agreement in front of them that has a certain value on it, say it's $200,000, that when he or she does her analysis of the property, if they come up with 198 instead of 200,000, then there's back and forth between the AMC and the appraiser, the AMC and the lender. So if the contract price is within the range, they're generally going to go with the contract price. I mean, value is not absolute. It occurs in ranges.
Very well. Ms. Rice, I want to give you the floor for this final minute. You had been mentioning in your previous answer the importance of technology here, not a panacea, as you said, but potentially a source of support. Are there any tools currently at appraisers' disposal to detect implicit bias in real time before it gets to the lender? Any kind of red flag technology?
No, there isn't.
Might that technology be important as we look to reduce bias in appraisals?
Yes, if it were built correctly, yes, it would.
And are there standards by which that technology could be evaluated to ensure that it was built correctly, to your knowledge? Where are those standards?
I mentioned that we just released a framework.
Terrific. Thank you, Ms. Rice. And Madam Chair, I yield back, and thank you again for a great hearing.
The gentlewoman from New York, Ms. Ocasio-Cortez, is now recognized for 5 minutes.
Thank you, Madam Chair, and for our witnesses that are here sharing their testimony today. Today we are focusing on the discriminatory and racist practices in home appraisals in our country. But we also know that many Black families and communities are disproportionately facing foreclosure now that pandemic foreclosure moratoriums have ended and mortgage servicers are beginning to ramp up back to full capacity. Madam Chair, I ask for unanimous consent to submit to the Congressional record the city article highlighting New York City's Black neighborhoods facing a foreclosure crisis.
Without objection, such is the order.
In New York City, we are starting to see that the majority Black zip codes had an average of 8.48% of homeowners who had fallen behind on their payments for more than 30 days. That percentage is 4 times that of the majority white zip code average and 1.5 times that of the majority Hispanic zip code average from September. Ms. Rice, data suggests that in the city's black neighborhoods, in New York City's black neighborhoods, which were devastated by the economic shocks and the pandemic, as well as decades of predatory lending, are most at risk of foreclosure. Is this consistent with what you've observed?
Yes.
We also know that most of the black neighborhoods with high concentrations of struggling homeowners are in Southeast Queens and in many parts of the Bronx, areas that lenders had previously targeted with subprime loans in the run-up to the 2008 financial crisis. Ms. Rice, we know that none of these financial institutions ever really paid a true cost for the financial crisis that they precipitated, especially not for the kinds of financial discrimination that black homeowners faced and continue to face. Would you say that's a fair assessment?
Yes, it is.
In your opinion, at the very least in the short term, should loan servicers provide loan modifications in order to make residents' monthly payments more doable to avoid foreclosure?
Yes.
So what we're seeing here is a history and a blatant pattern. We have the pandemic and the way that banks had serviced their mortgages and loans during the pandemic. You also have that compounding on the injustices and one of the greatest wealth transfers out of the black community in the entire United States during the 2008 financial crisis. But what we're also seeing is that when faced with the possibility of foreclosure, residents are more likely to sell their homes out of desperation, only to then be faced with discrimination in the appraisal value of their home when they're trying to get out of it. Ms. Rice, the U.S. Bureau of Labor Statistics found that of the roughly 80,000 appraisers in the United States, 97.7% identify as white, correct?
That is correct.
And we also know that across all majority black neighborhoods, owner-occupied homes are undervalued by $48,000 per home on average, amounting to $156 billion in cumulative losses to black wealth, correct?
That is correct, as per the Brookings Institution.
This is a scandal. This is shocking. And it should truly be an affront to every single person in this country that believes in any form of financial, social, and economic equity. In fact, a study by the Brookings Institute found that on average, homes in neighborhoods where the share of the population is 50% black are valued at roughly half the price as homes in neighborhoods with no black residents. We must do better. And it is just laid bare the legacy from redlining to the way that has transformed into and accumulated and built into the eventual 2008 subprime loan crisis, because it was black and brown and low-income communities that were especially targeted with subprime loans. And then for the pandemic foreclosure rates to be higher. Ms. Rice, do you have any advice for us as members of Congress, or even the general American public, and what we should be doing in order to right this wrong?
Sure, and I see the time is running out, so I'll just say briefly, adopt the recommendations in the PAVE action plan, implement those actions, and we also have a bevy of recommendations that we put forth in our analysis and study of the appraisal industry that I also would recommend being put in place.
Thank you. Thank you very much.
Thank you very much. I now ask unanimous consent to insert statements from James Park, Executive Director of the Appraisal Subcommittee of the Federal Financial Institutions Examination Council, and from Jillian White, Head of Better Plus at Better. Without objection, such is the order. At this time, I'd like to thank our witnesses for their testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you're able. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. With that, this hearing is adjourned.